All right. Yeah, so it should pop up over there shortly here, and we'll continue here. So again, forgive me with that. All right, come on. Right, there we go. All right, and the volume down. Yeah, it's down. All right. So yeah, so that's where we're at with this. We're trying to make sense. So oddly so, of course, when we did the live stream the other day, we kind of mapped out particularly what could come out of this market, what could probably happen today, right? And that's why I love this stuff, because again, it's a proving ground. I keep saying it. The markets are a proving ground, right? You can't talk a good game over here, right? A lot of other people got a little thing they could just talk you in. Yeah, we got this and this now, but over here, grown men and grown women stand up over here, right? Salute to you all, because I keep telling y'all, if you get into this and you learn this at a high level, you become initiated in this, you become an alien, right? You literally become an alien. You're not of this planet, right? Because this is a high level complexity of multitasking that you probably never done in your life. Maybe you guys, some of y'all, may have or whatnot, but you're dealing with a whole lot of information, right? You're dealing with a lot of retention of again, the basic values of looking at a technical analysis from different optics, right? Different
because if these women were serious, you know what they would have done? They all would have fired their agents.
Yeah, your brother Divine. I got him. It might pop open. All right, you're dealing with a lot of different, parameters here in a sense, right? So technical analysis, right? That's giving you basically the day-to-day, visual perspective of what markets are doing, right? Who's buying, who's selling, who's holding, right? And then it gets more intricate when you start moving into, the ancillary aspects of that. The moving averages, what they're signaling, the oscillators, what they're, what are they brewing, right? The level 2, right? When you kind of spot people in the market makers or moving markets and fluctuating the bid and the ask, right? Understanding what the spread is signaling to you when the stock is getting ready to break down or break out, right? If it's getting tighter or is it spreading out a little bit now because it may have a low float. There's a lot of, again, those ancillary things that make the market even more exciting once you be able to learn it again at a high level. So we're all trying to make sense of all that, mash it all together, and say, okay, let me go out there and now disperse it properly back into the marketplace, right? So we don't want to skip any of those things, or even once you've been in the game for a while, you might have to go back and revisit some of that stuff every now and then. Why? Because it keeps your tools sharp, right? It keeps everything greased and oiled properly, right? As they say, you always go back to the basics, right? You never leave the basics. The basics are always going to stay with you. Trust me on this one, right? Never get ahead of yourself to the degree where you kind of lose a lot of that hunger and that that fire in you to keep your craft polished in a way where you can command money out the markets as you so please for the most part. Not that you won't take L's, but your L's will be less and more, and your profit taking will be more, right? That comes from proper due diligence and sound discipline. So when you're dealing with markets and you're trying to figure out, man, is this market don't all I know is feel like it just need to drop, but it ain't dropping, right? Teflon done marketplaces, right? Or is it just ubiquitous buy the dip culture? When you look at the markets just in general, since we talked about it, who's buying the market of late? Is it retail, institutions, right? Matter of fact, I throw that question out to y'all right now. Just, I don't know, it's not a trick question, but if I was asking y'all right now, who's actually buying the market right now, would y'all think it's more institutions or retail traders just buying the market up right now? That's a question I'm posing that question to. Who do y'all think is buying the market right now? Anybody?
Institutions.
Y'all think a lot of institutions buying right now? Everybody thinking most institutions? What if I was to tell y'all a lot of the institutions are sitting on more cash right now than the retail are, and they're not in margin more?
Yeah, they sitting on that cash.
Right? Why? Because see up here, when we was peaking at all-time highs, a lot of the institutional money flow was being able to be, I guess, monitored or, I guess, assessed in terms of who's in the market, as far as or coming into the market new, because that's how they really track it. who's still coming into the market, right? Soon as we hit all-time highs and it became apparent that we were up against the brick wall, that we may be starting to have the conversation about thinking about taper with the Feds, in came a lot of pumping the brakes of the institutional money flow. Obviously, their 13D filings, right? That's how we can tell, right? The 13D filings are pretty much a blanket, moment where a lot of these companies or institutions, hedge funds, fund managers have to kind of expose a lot of their positions, right? And for what we were saying, let's say over the last month, right? Because that's the most critical time coming out of September, definitely from August, right? Because in August, of course, we had Jackson Hole, right? Jackson Hole was the litmus to kind of let us know whether or not we was going to have that conversation to think about taper. Well, it was almost but apparent that the Feds had to stop playing, the icky shuffle, right? Stop tap dancing and actually start talking about taper. Why? Because the aspect of the CPI and the PPI data, the inflation in the producer price index value of that was starting to show that inflation is still definitely not transitory, but it's actually it's going higher. So when there's a lot of gauges going off, oscillators, indicators that a lot of these kind of big fund managers use algorithms to kind of peak to the point where markets are seeming to be kind of at an inflection point because they're overbought, and not a whole lot of people are rushing in just to buy the market from a long-term perspective because everything got PEs well over their extended, levels of what they need to be for to price to equity ratios. They're like, whoa, okay, I'll add, but I'm not going to be going, gun-ho like we were doing, let's say, before all this news now came ahead. See what I'm saying? So a lot of what we've been getting on this downtrend here, a lot of this here, right? Basically, the falling knives that's been getting caught. Who y'all think been catching them falling knives? Institutional or retail?
That'll be the retails.
Right. All day, every day. They're the ones that are caught. Like I said, tonight's topic: Teflon done markets, meaning the markets can do no wrong, and stonks only go up, or the ubiquitous body dip culture, right? The retail trader that just popped into the game, let's say last year because of COVID, they ain't bred for, the reality of markets having to take a breather and pulling back and actually trusting the technical to say, okay, we might be a little overbought. Oscillators, MACD, statistics, squeeze indicate, all this stuff is, screaming red flag, right? But to them, they're like, oh, no, this is just a good opportunity to keep behind the dip, right? Because they don't understand the market cycles, right? For us, we have to make sure that we don't fall into that dive of temptation and take that kind of approach to markets. Why? Because you'll find yourself gambling at that point, right? Because you'll think, well, guess who's going to have my back? Well, Jerome Powell got my back because he's going to just keep printing the money. But okay, well, looking at what's been happening lately, if you've been looking at what's been happening lately on this, this obviously all-time high pullback since we've been pulling back, a lot of the major pops or bigger candles that seem to be bearish or bullish engulfing, the length of those candles, they've been met either with control pivot bounce, buys just play the scalp, and then as soon as they hit a peak point or a resistance point on a lower high, it's instantly getting sold into. So the market makers have been setting up a lot of retail traders because they know they got this body dip coach and they acting like zombies right now. That they're the ones that the hedge funds, they're pretty much going to clean their clocks. Why? Because they're trading more on the option side of things now than actually buying a lot of these positions outright. All right, and that's based upon the 13D filings. That's based upon what you see a lot in terms of daily volume value. We know that's a lot of there's retail and algos that obviously have flush value of cash because they're just trading. Because they think, again, everything going to rebound at some point. We're going to go right back to all-time high. But all the massive pops that's been happening, they've been getting sold into. Right? This first deluge here, that's your first bullish engulfing candle here. As soon as it popped back up to that resistance, it's got sold into. Right? I mean, going to the next day, gap down. They run it back up just to kind of get the markets off off this RSI pivot low. That's why all these things right here become important again. The RSIs, things like the oscillators. And then they hit a point of resistance right back to that gun line middle point there. Rising wedge, clearly y'all see it there, rising wedge. dumped it on them again, right? Nasty style, right? It's so obvious what they're doing. It's just like, man, how do people not see this at this point, right? Now you kind of get to a point where you got lower highs. Now you're playing the lower high game, right? We talked about that the other day during the live stream, right? We're still in the downtrend, right? Because we're still playing the game of what? Remember, it was like the lower high, right? This was the lower high yesterday before we had the gap up today, right? But guess what? Today's high, it almost reached that of what we had planned for. Y'all see that there? Couldn't make this stuff up, right? We planned for this, right? I was saving that bacon. I got to go back to my Will Smith commentary. I was saving that bacon. Did we not plan for this, guys? Y'all see that right there? How many of y'all was in the live stream yesterday, by the chance, on the YouTube? Right, couple of you guys was in there, right? Did we not plan for this bounce yesterday? Anybody?
I think if you break it down to an hour, it'll show the inverse head and shoulders.
Exactly. I was going there. See, sound effect. Beep, 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 where you hit the horns. Sound effects for you over, Jeremy. 100% correct. Even what you're seeing it from the daily chart here, you already see what's going on here, right? You can somewhat see it even from here, even though it's kind of not as lucid, but there's your shoulder, there's your head, there's your shoulder, and we plan for that gap up. Here's our resistance, that's the neckline, and we say we're going to have what? Equal or greater what? Breakout, and we can't. How close did we come to hitting that tire length of that? 441. We had it tapped at what? 442.51. So we basically came within almost 1 point. We came within 1 point from hitting that total goal. Tell me this stuff can be strategized and put into some perspective and where you can't, man, look. See, either they gonna feel us or they gonna what? They gonna see us bypassing them in something foreign. This is what I love about this stuff. Because once you get to the point where you're not trying to fight the markets and you're just allowing it to work in your behalf. I'm finna go to outer charts. Y'all can see exactly what we're talking about here. Of course, a lot of you guys, in your own right, y'all, this ain't nothing new to y'all. Y'all, some of y'all are seasoned in this, and a lot of us are still new, right? But we want to speak to everybody, no matter where they at in their journey, because we want this to be something of a family of fair value where we all can still function in a way where we can, strategize to this, in unity, right? In unison, I should say, excuse me, right? So when you see these things starting to unfold or, again, work themselves out, so to speak. All right, let me do that a little better. It ain't hard to kind of picture what's going on here. This is clearly what we talked about yesterday. Right? Clear as day, right? Inverse, right? Head and shoulders all day, every day. Now, some of you guys may be like, well, what is the inverse head and shoulder? Now, do anybody on here not understand what a head and shoulders pattern is? Right? And this is family time, so don't be acting like, if you don't know, please say something. Don't act like that you can't say nothing. Anybody don't understand what a head and shoulders is? Do anybody not know what a head and shoulders pattern is? I guess all y'all top-notch traders then. Let me hush my mouth. All right. So an inverse head and shoulders is just basically what? The opposite of what head and shoulders, right? So you have an inverse head and shoulders. Shoulder, shoulder, head. Neckline is the resistance point, clear as day. Clear as day. I mean, look at that straight line there, right? Clear as day. That's basically your what? Your neckline, right? So the rule of thumb is that how do you measure a head and shoulders pattern? You measure it by what? Anybody? How do you measure a head and shoulders breakout?
This is the bottom of the head all the way up to the neckline.
Right, or the top of the head all the way to the what?
To the neckline.
To the neckline, right? So if we take this bar here, which we did this yesterday doing the live, that's what? That's from the top of the head, right? The crown to the what? To the neckline, right? Of the shoulders. Y'all see that resistance right there? Y'all with me there?
Mm-hmm.
You take the length of that, you put it right at that resistance point, right? And that becomes, essentially the the move or the potential move that you will get out of that breakout if you are able to cross and breach that that resistance in the kind of breakout, or in this case, the pattern obviously uh you know runs in concurrent to what the pattern is obviously offering, because now you actually back at the neckline here. It's not like you was here, you're at the neckline at resistance. So you only got one or two options at that point. You either got to gap up into it to prove the pattern right, or you're going to fail miserably, and you're going to have equal or greater pullback, unless the market just pulled a stalemate and just tried to kill everybody. But if not, you can have equal or greater pullback to the downside, right? Which was going to bring it right back down towards that the head at that point, around about 427, right? Now, of course, we know that there's other factors that caused the market to kind of give that gap up, which we kind of explained that why we felt like the market was going to have that kind of gap up kind of day today. It was because we had all the hype surrounding what was the surrounding factor that caused the market to gap up today. Anybody want to take a stab at that? Beyond the technicals, right? Because I know I got some purist technical analysis, some kings and queens in the house, but also from the fundamental. Yeah, go ahead. I'm sorry.
Debt ceiling, a deal for the debt ceiling.
Elephant in the room, right? Elephant in the room, right? Markets love climbing the wall of worry,
Which
right?
I think is total bull crap. But we just play along with the fugazi. We got to get a deal for the debt ceiling, and we're gonna default, knowing dang well, they can never really pay this debt off. It's funny that the market moves off this fake news, but you got to play what's on the chart at the end of the day. Facts,
because guess what? We're still behooving to play by the rules of engagement. Why? Because do we control really, the chess pieces on the board? We do not, right? Because we don't have enough capital ourselves. Now, every now and then we can move a stock. We've been in the moments like that. Some of y'all, because y'all know y'all come out of, who've been around doing the trading days, right? We actually usually can move a stock on our own, right? The tight spreads, everybody bombarded all at once. We hit it with a gang of stock, a gang of shares, and the stock moved to our will, right? And then we out of there, and we like, y'all handle the rest. But for the most part, we're talking about the broader market here. Of course, a ticket like the S&P 500, which is the most, famous, ETF literally on the planet for what it's worth. A very liquid product, of course. It's the byproduct of the SPX, which is the mother of all tickers, right? The SPX is the mother of all tickers, even that of the Dow. A lot of people get, the SPX kind of, lost in the sauce because they don't really understand to that level, because you have to literally trade it through the futures market. But for the most part, this is the offspring of the SPX is the SPY. But it is the most liquid, ticket on the planet. And it's the one that when you have scenarios like, fund managers using some of the funds that the feds may be giving them that they don't get far to bond trade off through the reverse repo operation, they're taking some of that capital and they buying ETFs with it, right? Because right now the bonds are being monetized by the feds, because that's a need to kind of keep us from defaulting on the paper side of things, right? Which is really being a mess if they allow that to happen. But for the most part, they also giving the green light for banks, hedge funds, this, that, and the third, BlackRock, JP Morgan, the City, all them, to still go out there and buy ETFs for the greater part of doing the mandate of the Fed's bidding, right?
What's funny, Oba?
Go ahead. I'm sorry.
What's his name? Neil Kashkari?
Yeah, that's one of the Fed governors of Minnesota. He's the one from Minnesota.
Wasn't he on record saying that the Fed has infinite money that they can always pay to play, basically? That they always got money. It has infinite checkbook that they can write or print dollars out of thin air.
That's essentially why people that goes right into what tonight's topic is surrounding around. Because if you got people, even though they're not really of the government, but they are what they call a byproduct of government, because y'all know the Federal Reserve is a private organization, right? Let's make sure we get that clear. That way, I don't want nobody on here, because y'all everybody here old enough to know that at this point. I got to say it that way. Right? Even though this, a lot of you guys learning this stuff at different levels, but the Federal Reserve is not really a part of our government. They are a private entity that was born out of a chaotic moment, and since then they have not been dispersed, as they should have been by the powers that be, because ultimately what happened was it was a way that the government could usurp a lot of power away from the people and use this ancillary branch of not government, but a helpmeet to government, in a sense where it can be a buffer between Americans, people's tax dollars and government, as to say, no, these people here are here to protect your what? Your wealth. They're here to protect your Social Security. They're here to protect, the job market. They're here to protect all these different things, right? But ultimately, we understand that's not what they really do. They actually exacerbate the problems even more, right? So one of the biggest things we have going on in this country right now, there's a problem, is what? The wealth gap, right? Right? There's a massive wealth gap between, obviously 1%, those who have not, and even doing racial divides, white households as opposed to what? Minority or black households, right? It's a big gap there. Now, even though they tell you that, no, we're trying to fix this, that, and the third, right? It's a dual mandate. It's the Congress job and it's the Feds. But the Feds have more of the monetary or the purse aspect of it, given power by the Treasury to go out there and, make those equality level type mandates or purchases or not policy, but, to equal the cash flow around where it can balance out for everybody can kind of, reap the benefits of, the tax system. Now, of course, that's not what happens, right? Because we understand COVID was a gift and a curse. It was a curse because, again, it plagued our lives, disrupted our way of living, this, that, third, globally. But what it also did, it exposed what? It exposed all the governments around the world, did it not? Expose everybody. Expose all of them, because they said you want to get a person attention, you mess with their money. And when governments began to, GDP was crashing and everybody started panicking, you figured out who was the people behind the people that was pulling out of the purse string or pulling the strings like on some of these puppets, because they was all panicking, right? And it turned out, that again, a lot of that people were thinking, well, we should get, we definitely above all things. Now, when the global pandemic, we know the government should come to our rescue, right? Financially. Okay. When other countries start saying, okay, we don't want to deal with our people kind of riding us because, these people over here in our country are really about that life. And we know the people in America, they spoil, they entitled, they ain't really about that life. They just talk a good game, the keyboard warriors. When it was time to really do something for the American people, in came all the pumping of the brakes. Oh, well, see, wait. A whole lot of waiting. Other countries said, no, we're not going to deal with that. Let's go and cut these people some checks. Let's put some money in their pockets so they can feed themselves, feed their family, and keep them at least from coming for our necks, right? Because clearly this pandemic is not their fault. But in America, did that happen that way? It did not. But all your tax dollars that been harvested since you was literally born, because not just that you can pay as an adult, but they were taking your bond, which is your your birth certificate. That's a bond. If y'all didn't know that, go look it up. It's in the Treasury Department. We pulled it up and did that before. Your birth certificate has a QSIP number on it. So they've been collecting royalties off your life since you was born. Ever since your mama signed for you to get your birth certificate, right? Or a Social Security number. They've been collecting the royalties off your life. Now they then took all this money, and at a point where they supposed to have which we know our debt is crazy, but they're supposed to have a surplus of money, stashed away for emergency reason or purposes to be able to kind of offset that, to keep the working class, the Main Street side of the life in this country taken care of in case we have an event of this magnitude. And it's supposed to, grease your palm, make your life easier. Did any of that happen in the way that it should have happened? Without, us having to pull teeth, I mean, literally, threatening to kind of go to Washington, Capitol Hill, right? It didn't. It always comes through force with these people. Why? Because government has taken over the will of what the people were supposed to have in this country in terms of being free, independent, citizens that really control the government. That has now flipped, and now the government's controlling the people. And when it gets towards that, now you're moving towards what? Tyranny and anarchy, right? Of course, y'all don't need lessons in civics and politics in this perspective, but I got to speak this way for this one particular scenario. Why? Because it has made its way. It has made its way to the marketplace. It has made its way to the free markets, right? Because what are we dealing with right now in capital markets? Are we in a Keynesian marketplace? Or are we in the Austrian marketplace right now? Anybody? Are we Austrian or Keynesian marketplace right now?
Keynesian.
We're in the Keynesian marketplace, right? Hey, some of you guys might not be familiar with that. That's why we go over this stuff over and over. Sometimes we bring it back for a reason to keep you guys sharp. What is a Keynesian marketplace? Somebody give me the paraphrase version of a Keynesian, unless you want to look at the definition. But what is a Keynesian marketplace? I've got the YouTube family going on. Okay, yep, what's going on? All right. What is a Keynesian marketplace? Anybody want to tackle that? Give me the paraphrase version of a Keynesian marketplace. All right. So essentially, a Keynesian marketplace is where the government intervenes in our capital free markets, and they are really the front runner for liquidity, in a sense, to balance out what they feel like may be lacking in a time where investors who are of the free will of mind that can invest don't necessarily have the capital or the bearing to now, keep markets kind of thriving, where big businesses can take that capital, feed it back into their business, R&D with it, research and development, M&A, mergers, acquisitions, marketing, advertisement, and then go out there and grow their businesses, which entails hire more people so they can spend more money back into the system, which obviously grows the economy, right? Or the GDP. Does that make sense? Because of COVID, there was a stagnant moment where that wasn't necessarily in play because people were like, oh, whoa, I need to hold my dollars now because I don't know what this is going to turn out to be, right? It's COVID. It's a pandemic. We've never been there like this ever before. This is historical. We're in the history books at this point because of this pandemic, right? In our lifetime. So people have backed away from the markets. They started pulling money at the market. So Fed stepped, they said, whoa. We got to keep our markets liquid, right? We got to keep these corporations, comfortable. Why? Because if they tuck and run too, that's going to hurt the economy even more, right? They might start laying people off and all kind of stuff like that. We don't need that to happen, right? Because that's going to affect our GDP. Well, that's the whole purpose of your tax dollars for. The whole purpose of you paying taxes, supposed to help backstop you during moments of calamity, emergency, this, that, and the third. But the government then blew your money 10 times over in other things. That's why there's no surplus. Because they're too busy overspending for cheap things and blowing it on things that necessarily doesn't improve the quality of life for the American citizen. Now I know this is more one of those conversations where it's kind of a mix of two, right? Market analysis, but also real world reality value in terms of how you should function as a citizen on the Main Street side of things. But you need to know this stuff. Why? Because if you're going to be in this system and you're going to convince yourself that you just can, you just going to work your way through life and have no other streams of income or look into the investment side of things. Of course, if you don't have a 401k, a TSP, Roth, any of those things, right? Then essentially you're planning on hitting the lick at some point in life, right? To be able to kind of make up all that you didn't get through natural progressive retirement. You're going to try to hit a lick and make it all in once, right? Maybe, I don't know, find a bag or start a business, and next thing you become a millionaire. But ultimately, we know that's necessarily not the right way to do it, right? Because you want to gradually build proper knowledge, investment prowess, build up your investment prowess to understand how financial literacy really works, right? That it's a marathon, not a sprint, right? Because in doing it that way, you build a lot of discipline, right? You're not of the mindset where you want to risk things that doesn't necessarily need to be risked. You're going to take the more methodical approach. And in doing so, you're going to let that money gradually grow because you're going to invest it properly in the right places and allow it to continuously work for you over time, right? That appreciation aspect, right? That compound interest, right? That we all live for every day now that we are investors and traders. So understanding how the game works is going to give you solace to know how the system works. It's going to prepare you to use the system to the best of your ability, because if not, it's going to use you, right? It's going to be trying to dig in your pockets. We spoke about that the other day, right? The government is trying to dig in your pockets more than trying to go into put money into your pockets, right? That's their whole job, right? They figured out now how to, scare people enough to the degree where they don't ask the right question and they just allow things to happen to them, right? But eventually that's going to come to a head like all things. If you go look through historical time, only so much that you can get away with doing before people come for your necks, right? And I'm saying that, not saying don't y'all go do that now, but y'all get my point. At some point, people are going to get tired of the foolishness. But in the interim of that, we're going to be prepared, right? We're going to make sure that we know what's going on in the charts. We're going to understand, the game plan that we need to focus on as, people who access in the capital markets, no matter what asset class you're in, Forex, crypto, stocks, whatever, mutuals, options, whatever, it's all synonymous at the end of the day, right? There's a buyer, there's a seller, right? There's a product or a service, right? And there's a mandate to follow the money, right? It's a basic understanding. Follow the money. End of discussion, right? Because your money is not big enough to move the markets on its own. You need institutional banking, backing, banks, hedge funds, fund managers, et cetera, et cetera. But in doing so, learning how to follow their regime or their big bank, take little bank, their theft of markets, right? Because they're utilizing the value that the feds are just going to backstop everything. Then, yeah, it has bred of late the buy the dip culture. So it's not that markets are Teflon done that they could do no wrong, even though you would think we should have pulled back at least by 10% by now, minimum, right? Or at least a whole 5% almost in a day, at least one good limit down day, which ain't came yet. Last time we had limit down, that was way back in what? December 2018, somewhere around there, right? Like, make that make sense, right? But all of a sudden now, with the way that the feds have really choked the market in a way where they can, killed a lot of the volatility, right? They dispersed a lot of the bearish sentiment in a way where they would just literally control the markets like the Wizard of Oz, essentially what they've been doing, right? By printing all this extra money. All that had did was what? Made this market literally implode on itself. Why? Because again, who's working to equal out the debt that we're incurring through all this money print that's diluting the dollar? If the factories are basically still closed and people barely at work, how are you having an equal exchange? Again, they're not paying any more checks out right now. Matter of fact, they just stopped unemployment, right? That extra boost. The housing moratorium is ended. You got to pay your bills now, right? But most of the people still ain't even back to work yet. And they're playing the base effect game on you when they're trying to say, well, we're getting back to normalcy, right? Well, they're doing that from the bottom up. Everything look bigger from the bottom up. So ultimately, we're not back nowhere near what we were pre-COVID. So it's a lot of false readouts, basically is my point. But one thing we do know that's not a false readout is what? How to look at these charts and find the money. How to utilize the tools that they are most religiously indebted to than they have the American person, which is these equities or people who own assets, because those are the people that they're going to backstop first. Period. End of discussion. Roll credits. You're not going to defeat capitalism in an anarchy 99 way through your dollars by trying to revenge trade it for the fact that that these people are just high level, strategists or thieving to the degree of taxpayers' money for the benefit of the wealthy by saying, I'm gonna come in and try to short every single thing when it's not necessarily conducive to you to short when the moments are not telling you to short. Because sometimes you're gonna have to go long with it too. So in saying that, we're gonna remove the implicit biases. Again, as we keep reiterating that, we're gonna get our minds right, our discipline game right. We're gonna start thinking and moving like what? Wall Street analysts, Wall Street investors, algos, all that too, and play the game at a high level where we're here to get the bag. We're here to be able to detail exactly what's going on when we see these patterns here, in this case here, this head and shoulders, right? And play it in a way where we're not mistaken when we see this here, we know how to react to it, right? That's what it takes to be disciplined in this. That's what it takes to, to reap the benefits of it. Because again, knowing what we know about how they run this system and this operation, it's enough to piss you off. It's enough to piss you off. It's enough to really make you upset because they just doing high level thievery, right? Again, the government is just full of white collar criminals. But again, who polices them? They police themselves, right? So how's that ever going to be just, a just system, right? We know that this is America. Let's stop playing games. We're adults. All of us on here are adults. We know that's how they get down. So what do? As the saying goes, if you can't beat them, you do what? You join them, but we don't join them in the way that they think we join them. We join them in a way where, okay, these are already my tax dollars that you gambling with. Because I'm gonna say it from that perspective, because they're gambling with it. We're actually trying to make really concise decisions with our investment dollars to look out for our future. So we're always in an investor's mindset, even though we day trade and using that opportunity that we can too. So you have to get behind the money machine because it's already your money. Moment of silence right there. It's already your money. All this money that the Fed is printing and going into the markets and buying bonds and backstopping the bonds so they can keep yields low, so they can keep the volatility low, so they can just allow these corporations to kind of benefit off this influx of cash that's coming in through institution and retail, and other people want to come and invest in our market because theirs are pretty much tanking or sucking. This is all for that, so that our companies can look like they're Teflon done, and they could do no wrong, and they need to benefit from this cash more than that of Main Street, because they feel like a rising tide lift our boat. If you get the corporation money, eventually they'll work through all this pandemic stuff, and then maybe they may get back to a point where they use some of that cash that they got from taxpayers' money. Again, a solid bailout. It's a solid bailout. It's a solid bailout. Every day the Fed prints more money, it's considered to be what they call a solid bailout. And y'all don't have a say so in the grand scheme of that. So how do you fight back against that? Well, you can't work your way back out of that. Well, some people feel like they can. I got a good job, got me degrees, all that. Yeah, I'm just gonna go work. I'd rather go work. I don't want to do nothing else. That's all I know. Hey, to each his own. More power to you. But over here in this camp, the reason why we're here to be able to figure out how to get, there through a beeline, best as possible, least path of resistance, as we say a lot, right? We don't have to prove a point to nobody, right? You can go old, gray, blow your back out trying to prove something to people that don't want to be impressed by you anyway. We're not going to do that over here, right? That's why we don't do echo chambers, right? We do real critical thinking over here, right? Because when it comes to finances, it requires that. Why? Because two things that people don't play with is their money and their love life, right? If we stick around the money, then eventually we're gonna figure out how to get it. Make sense? And it's legal, right? So shout out to that. So if you see it, you act on it. Or if you don't, at least you know what's going on. So the point where when you see it again in the future, oh, I've seen this picture before. I've seen this movie before. You're not confused. You're not confused. Right? So, it's not so much that markets are Teflon done, right? It's just that people are being programmed. Again, tonight's topic, markets are Teflon done, or is it a ubiquitous by the dip culture, right? We have to be able to recognize that, right? In a way where we can now act on it. We can act on it and not be emotionally compromised, because we know that these people are sliming, right? That's what makes us different. So you might want to refresh and go back and look at some of your patterns so you don't be confused when you see stuff like this here. You might want to start thinking about getting off of these smaller time frames and go look at the hourly charts, look at the daily charts, look at the weekly and the monthlies. Why? Because the markets are in a volatile state right now. When volatility creeps into your marketplace, what happens? You have to be able to step back, look at everything, be like, okay, I see this, I see this, I see this. I see this on the 5 minute, I see this on the hourly, I see this on the weekly, I see this on the daily. All right, I know that we got a sector rotation going on now. I know that we might be dealing with a flux of cash move from growth stocks back into what to value plays because inflation starting to pick up again. The talks of inflation, is starting to kind of become more of a ubiquitous ideal that the Feds might be tapering. And guess what? Here's a signal. Why? Because the 10-year yield is starting to go back up again. That means that's bad for tech stocks. Okay, so that must be good for what? Defensive plays. What are defensive plays when the yields start going up? Utilities, energy, finances, supposing finance, because what interest rates go up, that means banks can make money off what? Robbing people through interest. But even them, they're not even immune. When moments where markets has been this oversaturated with what? A whole lot of greed and gluttonous, anybody can get it. Technically, they're supposed to be able to benefit from this, but that's neither here nor there. Why? Because either way you look at it, you still got to be able to read these tea leaves here. That's why we call the candles tea leaves for a reason, right? Right. Some people got green tea. Some people got that old school oblong tea, right? The black tea, right? The red candles more synonymous with the black tea, right? Yeah. See, make it make sense, brother. After four, right? But it's fun, right? Because we have a ways to enjoy our craft in the pursuit of getting the cash or getting the bag, and it don't feel like, oh, this is just so tense, and oh my gosh, I just know that's not how it's supposed to be. It's not how it's supposed to be. Even with your long-term investment thesis, it's not how it's supposed to be. It shouldn't be so nerve-wracking, right? Just to hit the buy button, right? Or to hit the sell button, and ring the cash register, right? Or to take an L, right? And not sit there and just go to zero just because you want to prove a point that you think the market is going to bounce when you think it's going to bounce. That's not how this stuff works. And if you trade like that, we're here to correct that, right? It's okay to cut your losses sometime in the same bro. But ultimately, again, we're trying to be on the right side as much as possible, make decisions based upon what we can account for, and then we let the chips fall as they may, so to speak. All right. So again, if you are of the mindset that you think, maybe the markets are just, giving false signals right now, and eventually this thing gonna go back and make all-time highs, and that's fine. We're gonna do away with the idea that it may just be one-off event because, hey, we'll get ready to kind of really move through all our different talking points or issues with the market. So after all those things are dealt with, we can't do them but go back up, right? Well, keep in mind, we just came off of, matter of fact, let me clear this here real quick. So we can put this into more perspective, right? Because I love looking at, past performance for a reason, right? Past performance always is a predictor of future potentiality. Right? Y'all should hear me say that a lot. I still say it, right? Let me say it slowly. Past performance is a predictor of future potentiality, right? Let that resonate for 2 seconds. Let that marinate, right? Let that thing sizzle a little bit. Let that thing percolate on that pot with that gravy be popping. Pop, pop, pop. Yeah, let that gravy pop for a second, right? Past performance is a predictor of future potentiality. If you are an investor or trader, there's no way in the world you're going to convince me that you should not be focused on understanding how to game plan based upon past performance.
Hey, Oba.
Go ahead.
I didn't cut you off, but in the Forex world, we always learned that the saying was past performance predicts future profits. So
Facts.
Say
Same thing, right? See,
right.
Rhyme reason, right? They say rhyme or reason, right? See, all this stuff is ubiquitous, right? Across different asset classes. People who've been in the game long enough to understand how this stuff works. It's all synonymous at the end of the day, right? As we say, the 3 building blocks is what? You got to understand. When you first come into the game, you got to do what? Learn these 3 things, right? That's the first thing everybody going to tell you. Any kind of instructor, mentor, personal, your homie. Hey, you got to learn technical analysis. You got to learn fundamental analysis. And you got to learn how to what? Read price action or investor sentiment. Those are 3 things, right? I got 4 fingers up, but 3 things. That's the basics. And then they're going to say, well, okay, when it comes to technical analysis, hey, everything that you're going to learn about this game is going to be in a trend or a pattern, right? Or isolated candle, of course, the different stuff like that. But ultimately, you're trying to look for what? Signals in the market by looking at past performance, right? What did the market do way back there? What did the market do before that, right? So if we go, let's say, daily, right? if we come over here, right, we clearly see look, you can't even put it all in the screen, right? That's how you know it's a hot mess, right? You know it's a hot mess that these people just been, man, look, these people been eating good, right? We've been eating good too, of course, right? That's why we in here, right? But again, going back to the COVID low, we was in a pandemic and the markets hit all-time highs during the pandemic. Anytime before that, you know, that's not necessarily the business of the day for wouldn't have allowed that to happen. You would have had at least, you know, some fight back, some growth, but then we had a steady kind of gradual, maybe incline. But this is almost like a 90-degree angle. And investment values, a market to go from here linear like that right there is a 90-degree angle. Even though we know market's supposed to go in like 45-degree angles, right? So this, somebody might, I got, but I think, right? Market's supposed to go, you know, gradually in a 45-degree angle. This thing is going straight up, right? That's why you see I got that blue line right there, right? Right. If I, you know, harken that down a little bit here. Somebody mic open. Who is it?
My bad.
Oh, you go over. Hey, peace, power, property over. I see you came in the building. Peace, power, profit over. All right. If we put that, if you see that blue line there, that's the COVID lows. This is where we hit all-time high, right? Right. Show you how the market worked, right? Like I said, we planned for this. We were saving that bacon, right? We were saving that bacon. Y'all see that line right there? Where that line at? Right at the all-time high, but right when it began to fall back down towards it. Once that line broke, it was game on. Why? Because look what happened after that line. It broke that line right there. Off the COVID lows, that linear line straight up. When it broke that line there, the candles began to what? Grow. Look at the size of them candles after that line right there broke. And it's no secret. Look what happened at that line. What kind of candle is that right there, guys? Anybody? What kind of candle this guy right here? This one right here that I got my crosshair on right here. What is that candle right there? Anybody right there? What's this guy? Y'all need to draw it. Let me draw it right there. Anybody? What's that candle right here? That guy right there.
It's a doji.
Doji.
Right? I know my Christian black man. That's the cross, boy. That's the cross, boy. That's the cross that Jesus died on. Ooh, Jesus. That's my Jesus right there. I could have lived at y'all comfort. I know y'all Christian. Like, hold up, move on.
Nailed right in.
Right? That's what they nailed. They nailed my Jesus on that cross right there. Well, guess what? In the world of capitalism, they nailed a lot of what? They nailed a lot of bulls on that cross right there too. Right? They nailed a lot of bulls on that cross right there because guess what? They wasn't ready to deal with what? Losing what? You know, in their value, losing trend off the all-time high. They refused to look at all the other what? Scenarios or surrounding the markets. It was causing it to kind of crest at that point, exhaustion of buyers, right? You had ran out all the short sellers at the point because you crushed them all. You pretty much obliterated all of them. You didn't have nobody but buyers. It was everybody on one side of the ship and nobody on the other side to balance it out. So eventually the ship was going to what? Tip over, right? So guess what the ship did right here? The ship right here was what? Weighted to what? One side, right? And it what? It tipped over, right? And all come to spill it, right? In come the Titanic scenario, right? And was welcomed by crossing the if you want to call it the T line, right? The trend line off the COVID lows. At this guy here was the doji. Right at that line, the gun line. Tell him about the gun line, boss. Right at the gun line, in came the most egregious bearish engulfing candles you ever want to see, ever. This right here put the fear. This right here put the fear of Candyman and a lot of the bullish traders right here. Look at that candle right there.
You say Candyman.
See, three times. Somebody give me 3 times of Candyman. I'm gonna see if y'all about that life. But y'all still scared of Candyman after all these years. Shame on y'all. Just grown and resting, still scared of Candyman. All right, I'll leave y'all alone. I ain't gonna mess with y'all. But look, I mean, that right there put a lot of fear in the bulls because they thought we was protected by who? The Feds got our back. We thought the markets would work. Teflon done, right? Stunks only go up, right? Ain't that the conversation, right? Markets are Teflon done, right? Well, that was true on this side of the hill, but on the way coming down, now the what? The ubiquitous by the dip culture that the Fed's bred and everybody buying this market up, right? The ubiquitous by the put BD by the BTD, they tried to come in and play Captain what? Captain Saver market. That was not institutions. Why? Because institutions smart enough to know when they what the market's getting ready to what roll over. Would y'all agree with that or disagree? Anybody?
Nah, I agree.
Anybody agree or disagree?
Yeah, I agree with that.
I agree with it.
That's why I asked y'all earlier on what who buying the market, retail or what institution. Remember I asked y'all that at the very beginning. That's to let you know that see they are privy to be able to see these things. A lot of retail traders are buying on what starts with an E, right? They're buying on what emotion. And they've been bred by the Fed, literally. They've been bred, bred, right? Y'all know what I mean by that? You know, reared by the Fed to be what? A ubiquitous what? By the what? By the dip culture. Stunks only go up. By the dip. By the dip, by the dip, by the dip, by the dip, by the dip. Baby need Pampers, by the dip, by the dip. They don't care about nothing. All they know is by the dip. They train like robots. Am I lying?
Nope. By the dip.
So, by the dip. So every time it dipped, they tried to buy. And what happened? They got their face ripped off the next day. They tried it again the following day. Oh, we got to be bouncing now. Well, we back at the trend line. We back at the support. Oh, we got to be bouncing now. Boy, ain't no way the world Jerome Powell gonna let it go to bed, hungry like this again. Feds on the print. All right, cranking the money print. Buy the deal and get what happened. They got gutted. That.
Yep. Pull the rug from them.
Y'all remember that chart we put up about the cycle of investor? How the chart, go from optimism to excitement to euphoria, then back down to what panic, sell, capitulation, all the way back down to fear and all that. See, that psychology chart matters for a reason.
Mm-hmm.
See, that chart been around for what? For a lot of years. And a lot of people still to this day won't honor it. Because they have been conditioned to what? Act like robots. Because a lot of people, again, like I said, they ain't been through no real crashes. They ain't been through nothing. A lot of people just came to the market literally last year because of COVID. They ain't been tested. You feel me?
Yeah.
So if they ain't built for this, they gonna come into the market blind with what? Emotion. And the one thing I always try to tell y'all don't come into the market with what? It starts with I. Leave this stuff at the door. Leave this stuff on your nightstands or you don't come into the market
bias.
Come through over rich. If you come into this marketplace with implicit bias, you're gonna get your face ripped off.
Yeah. No emotion. Just
Make sense? The market don't care about your feelings. The market don't care about your bills. It don't care about your boo. It don't care about none of that.
Thanks.
Yeah.
Either you want to play ball by its rules or it's gonna what? It's gonna force you to accept one way or the other. Right? You ain't paying a lot of tuition. Like, well, you back in the 8th grade again? Well, little Larry can't get out the 8th grade. Little Larry been in the 8th grade about 5 years. He like, man, they going to social promote him. He don't want to learn. He don't want to learn. Right? Well, guess what? These markets here do not social promote you over here. There's no social promotion in the markets. I'm sorry. There is none. Because why? It's a performance-based industry. You have to move your feet. As the saying goes, if I don't move my feet, right, I don't eat, right? When I move my feet for bread and meat, yeah, you're going to have to move your feet. In this case, you got to move this one up here, right? These are your feet right here, right, up here. The best tool you got, the best advantage you got is this tool right here, right? It's saving you from having to use this, your back, your knees, right? If you use this properly, you straight. See, what we talk about here, again, this stuff is not outside y'all pay grade. Matter of fact, to be frank and exact, this is y'all pay grade. Why? Because it's y'all money. True story.
Yeah.
It's taxpayers' money. Am I lying?
That's true.
It's taxpayer money. Okay, you don't believe me? All right, let's go play Ring Around the Rosie then. Ah, let's run over here real quick. Do. Right? Let's go play Ring Around the Rosie. What that right there say? Market dashboard, right? We come over here often, right? We come over here often. This is the what? Somebody, what that say at the top? What is this? This is the what? What is this right here, guys? Anybody?
Federal
Federal
Reserve Bank of
Reserve.
New York.
And what is the main purpose of the Federal Reserve Bank of New York? What are some of their main operative values that they're in charge of? Anybody?
Printed money.
It would seem, right? See, like they got more control than that. Yeah, but
In the treasury.
they play a very, again, I
Monetary
answer,
policy.
right? They play a very ancillary role in what the overall aspect of the Federal Reserve, right? Because there's different branches of the federal government on the Federal Reserve side, right? They're different governors, right, from different jurisdiction regions, because they're breaking down by regions. That's how it's set up, right? So all these different Fed governors or their particular region has a specific mandate or a value that they have to produce in terms of the greater good of the whole nation, right? Bringing it together. Now, if you think about the East Coast of America, this would be more of the what? The banking hub of America. Would y'all agree with that? The West Coast of
Yes.
America is more of the what? The innovative corporate side of what? Our country. Would y'all agree with that?
Mhm. Yes.
Right. All the money that come out of Silicon Valley alone is nothing, man. Look, so we handle the banking over here. They handle all the innovation and R&D, all that stuff on the West Coast. And everybody in the middle just kind of what? Contributing players. Does that make sense?
That makes sense.
So the Federal Reserve of New York, that's why there's not a Federal Reserve of California. Notice that? Right? Right?
Mhm.
In terms of that, because they too busy innovating over there and partying, getting high, and being, homeless, and I'll leave that alone. Catching on fire, I'll leave that alone. Shout out to everybody in my California family. Y'all know what it is. Right?
Mm.
So the Federal Reserve of New York handles what? See right there? That part right there. What does that right there say? Somebody see, can y'all see that right there? I just highlighted right there. What does that say right there? Oh, let me clear all this other stuff off. That's probably why y'all can't. All right. Let me circle
Market
it.
operations, data surveys, and reports.
The first thing they lead off with what? Is what?
Market operations.
See, y'all notice that when they tell you when you go buy a product at the store, right? And you look at the ingredients on the back, the first ingredient that you read on a package or anything is basically what? The most what? Important ingredient in that what? In that package. Make sense? I mean, it's more of that ingredient or item than anything else in that entire what? Concoction. Make sense? Y'all with me there? Like people like, man, we don't know nothing about that. I'll read no packages. I just buy it, bro. I don't care what's in it, I just buy it. No, but
makes
that's
I ain't gonna lie to you. I didn't know that. I ain't gonna lie to
That's
you. I
true.
didn't know
That's
that.
true story. That's true story. So anytime you skew, and this is where it gets deep, right? Because we talk about commodities, right? Commodities are the first layer before you get to a product or a manufactured good, right? The raw goods and service, right? When you bring together a cup of tea or your favorite soda or whatever, the first ingredient on the back of a package is what's the most in that package. That lets you know if you're getting a watered down or you're getting. The first thing you see on this Federal Reserve Bank of New York is what? Market what? Operations. What market? Right? The wet market, the debt, no, the market operations. More surrounded around what? Doing the bidding of the what? Treasury, by also being major players of the what? Or I should say the backstop to what? The STOC what? Stock market. And one of the major players underneath the stock market that the Feds and the Treasury definitely tries to make sure that they keep a handle on every day is what? What's that word down there? I probably should use a different color ink pen, right? What's this one right here say?
Oh,
Can I see my screen?
bonds.
The bond market. The bond markets are part of the stock market, right? Well, your entire economy is based on your what? Your bonds.
Bonds.
That's your debt. That's your last layer of defense before your company or your corporation go what? Go under. So Federal Reserve in New York has a mandate to make sure they protect the what? The bond market. That's the biggest market on the planet in terms of what they call real cash flow value. Why? Because what's tied into the bond market? Your house note, your car note, your credit card debt, right? Your student loans,
All bills.
right? Basically bills in a nutshell, right? Now, what's most important? All this right here, or you just in a position where you could just go out there and buy your little bag of potato chips, or right? Or you could just go to a football game and all that stuff there. You like you feeding the economy because you could buy a bag of chips or go to a football game. No, that ain't important. I'm sorry. It all depends on the bills of America. They have a vested interest to protect what? These here, because these are the most what? Tangible assets in essence, in a lot of ways, even though there's some credit value in there too, but it has a lot to do with, hardline asset values. So they print a lot of fiat currency, which is basically what? Money printed out of what? Out of thin air, right? It has no intrinsic value whatsoever, no more than what they sign it, right? Thin air money. That's what I'm gonna call it, thin air money, right? They take that fake fiat monopoly money and then turn around and buy real what? Hard, tangible assets. And then they put a what? A credit rating on top of it, and then they also put a what? A bond to backstop it. An extra layer of insurance, in a sense. Even if you default, they already have a pool of money ready to kind of what? Come in and what? Absorb that default value of that they can't get off a lien or something like that, and they can't turn around and resell it. But they also got enough cash where they can come in and what? Absorb that debt, and then resell it back into the market again, and it starts to cycle all over again, right? That y'all probably seen the little thing where you had a little, circle of arrows like that. That's how this stuff works. So I know I didn't say a whole lot in that moment, but this is how your money is going to work without your consent every day. If you're an American, you got a Social Security card, this is how your money is working without your consent. Oh, a portion of that supposed to leaks into the Social Security, right? SSI. A portion of that's supposed to lead into what? Medicare, right? A portion of that supposed to go into. Oh, stop. Seriously. This is what they call the, for lack of better saying, this is what they call the no Vaseline aspect of America. No Vaseline. I just put it like that. I just leave it at that. We're all adults in here.
I was asking people yesterday, did any of that money hit their bank account yesterday? At 1.4 trillion.
Oh, from the debt. I'm just kidding. The debt ceiling number and see.
No, the repo.
The repo. You talking about the repo?
Yeah.
Yes. Yeah. 1.4 trillion there. So again, and we talked about it before. Cause I think Sister Kelly asked me. She came in the group the other day. But she in and out a lot because she busy. And she was like, "Well, what is this reverse repo operation stuff?" Right. So we talk about this a lot for, through training a lot for a reason. We're trying to edify our knowledge banks to be able to deal with this stuff when we see it, we can hear it, we can explain it, we can deal with the markets surrounding it. Why? Because it's an extra ancillary, again, backstopping of what? Like we said earlier, people's house, car notes, credit, bonds, all that stuff like that, right? That's what it's there for. Essentially, what happens in the reverse repo operation is that what? The feds are basically transferring all these bonds that they're harvesting. They're literally buying bonds left and right now, right? They're buying junk bonds, muni bonds, They buy T-bill, they buy everything they can get their hand on in terms of the bonds, right? Because they're trying to backstop our debt from defaulting, right? It causes more problems than good, obviously. And then they turn around, take those bonds, and go to the banks or these counterparties and say, hey, take these treasury notes. Give us the money for it. By you owning a portion of the debt or holding a piece of the debt of America's debt, you're actually safe. You're a safe player, right? And we're gonna take that cash that you got, because we need cash in the feds to now take that and what? Force it back into the what? Into the, I'm gonna say the system, but essentially it's going back into the what? It's going back into the what? This word right there in the middle. It's going back into the stock market, right? They got other people that's going to do the bidding of the feds to make sure that money goes get injected back into the stock market. Beyond just them buying the T-bills alone, treasury, mortgage-backed security, which we know the amount of that. They do what? 120 billion every month. 80 billion goes to what? T-bills. The other what? 40 billion goes to what?
Mortgage-backed security.
Mortgage-backed security, right? Housing loans, stuff like that, right? That's all that is the bonds. Notice that? That's all the bonds. Well, guess who bond also get bought in the middle of all that stuff? Apple bonds get bought, right? Boeing bonds get bought. Amazon bonds get bought. Netflix bonds get. Y'all see where I'm going with this? Right? Guess who's doing all that though? The counterparts that the feds are delineating, giving the opportunity to do some of their bidding for them. People like BlackRock, JP Morgan, right? Citibank, right? These big major guys. They're the ones doing all the bidding for them. And then down the line, some of that stuff get dispersed to some of these fund managers that are trusted. And they say, hey, here's also, and they go by what? The SPY and stuff like that. If they keep the markets liquid, that money obviously is a revolving door. It hits a certain peak, they pull some of it out, and what? They start all over again. Wash, rinse, repeat. So if the counterparties, because we had the biggest reverse repo operation ever in American history last week. How much did we hit last week? Y'all, I'm sure y'all know this, but how much did we hit last week? The biggest ever in American history was what?
What's that?
How much in the reverse repo operation in terms of what they was able to kind of do in the auction?
1.6 trillion.
$1.6 trillion of taxpayers' money. And I'm saying that it's taxpayer money because they basically traded off what? They traded 1.6 trillion value of America's bonds, debt structure, gave it to the banks. The banks in turn gave money back to the what? To the feds or the treasury, right? The feds took that cash and dispersed it to some of their what? I'm gonna call them henchmen. I'm gonna make this stuff fun. They're henchmen, people like BlackRock, right? JP Morgan, et cetera, JPM. JP Morgan in turn took that money and shot it right back into the what? Into the what? Some of the bank fund stuff they need for loaning out money for a client, but for the most part, they put that money back into the what? Stock market to keep it liquid.
Yeah. I mean, that's how it normally goes anyway. It normally goes from, the treasury to the feds to the bank to the treasury, treasury to the feds, and it's just a reoccurring system.
It's a cycle. Now, this wasn't supposed to be ongoing like this, guys. But y'all notice or not, this spun off the last economic crisis we had on the subprime lending crisis that we had 2008, 2009. That's when they started this quantitative easing thing at a level that we've never seen before. They have not stopped quantitative easing since that started. They have not stopped since 2009. And they've been getting away with it. And no one is saying anything about it. Why? Because the same thing Elizabeth Warren was crying about the other day, that what? If you're a government official, you should not be able to what? Invest in the stock market, because that's a what? Conflict of interest. Of course it is. Why? Because y'all making policy with America's tax dollars and then turn around and buy in the market knowing that the market's finna get juiced by what? People's tax dollars. I think that makes sense. The feds just got caught. 3 of them. 3. One high-level vice chair, Fed chair got caught front running the markets. White collar crime, insider trading, up and down. Ain't no and if buts about it. Anybody else would have went straight to prison. Don't pass, go collect $200, you go straight to prison. But these people supposed to be doing the will of the people. Backstop you. Move on, Brother Africa Poor. So, in essence, every single day since 2018, well, September, the month of September 2019, when they reenacted the reverse repo operation. They already had been still doing QE, right? They've been doing QE already. Now they inculcated what? The reverse repo operation back in 2019. They started up around September 2019. And that was only because of what? The tariff issue, right? Because Trump got us in a, brouhaha with China. They needed to backstop what? Banks, right? They needed to backstop the banks because they were having liquidity issues. That's the only way that the feds keep the banks liquid, right? They do it through reverse repo operation. You give us cash, we give you bonds. Bonds is an incremental value where you can have some growth and reap some profits on it incrementally, but you can only make so much. We'll cap you on that, right? But you still get a chance to help the economy out in the same breath. And they just, again, wash, rinse, repeat this thing. So they're just recycling taxpayers' money in and out, printing more money, keeping the market propped up while Main Street has to figure this stuff out on their own. And the American people are not really invested in markets like that. They got a little 401k here, a little pension here, a little Roth, a little TSP, but they ain't really be micromanaging this stuff on the most part because they feel like they ain't got time for this. Of course, we do. That's why we here. True story. Right? True story. That's why we're here. We're not here just to play checkers. I'm not here just to, hey, give me a ticker, brother. All right? No, I'm not finna throw tickers around all day. This is not an alert signal campaign over here. We don't do alert signals over here. We're trying to make good, conscious decisions about how to utilize our money properly in markets thoroughly so we can have a consistent pipeline of opportunity afforded to us because we're using, which is already our tax dollars, right, in our best interest for change. By, again, as we like to say, as we know to say, we're trying to do what? We're here to what? Follow the money. And whose money is it? That's the question I posed to y'all. Whose money is it?
Money.
It's my money, and I need it now.
Say that again.
It's my money, and I need it now.
Call J.G. Wentworth. 877 cash now. 877 cash now. 877 cash now. It's my money. I need it right now. Facts. It's your money. Now, everybody I know ain't built for this. People like, man, I ain't got the mind frame. I ain't got the patience. Man, I ain't got the nerves for this, brother. What do you mean you got nerve for this? You ain't got to be in trying to day trade like grandmama at 80 years old. That's not what we're trying to tell you. You still need to learn how to go into the system and extract some of your money out of it. You still got to go out there, Ashe, you still got to go out there and what? Not day trade, but invest in the market and long-term perspectives too. Put some of that money to work so you can pull some interest off that and appreciated value that you can never get sitting in a money market account right now anyway. You ain't getting enough in the money market account. The only people that's buying, you know what's crazy? The only people that's utilizing money market accounts right now are who? Who y'all think got money market accounts right now? Seriously, honestly. Now, we all know what a money market account is, right? I mean, your banks, give you the ability, but they can make a little interest off the money. Who utilizing money market accounts right now?
I say older people.
You say old people, somebody say brokerages, right? Right.
Those who don't know any better.
Right. The uninitiated, right? Right. Right.
Oh, nobody.
But for the most part, only people utilizing that right now is who? These people right here. Forgive my chicken scratch, but who's that? What that say right there?
Banks.
They buying their own what? They carnivores right now. They're cannibalism. They're doing cannibalism right now. They buying into each other's money market fund. It's paying 0.0, right? Probably 0.0, maybe I don't know, maybe 0.02% right now, maybe if that. But guess what? to with billions of dollars though, that 0.02% go a long way. But if it's us, the American people, let's say you got 100K in there, right? What 0.02% on 100K? Right? And I'm just throwing that number out there, but it's probably a lot less than that. But just for the sake of the case study right now, what's 0.20% of 100K?
$2,000.
That is $2,000.
Mm-hmm.
0.02%. So about $2,000, right? On that annual basis, off 100K.
About 12.
Right? Think about that.
$166 a month. 167 rounded off a month.
How much? $167 a month?
Yep.
$167 a month off 100K. Now, let me ask y'all this question here. Do y'all think y'all could do better than that with 100K if you had ways to invest that money yourself properly and find you a good fund that can give you about a 6, 7, 8% and on growth value, right? If you just do the loan game alone, do you think you can outbeat that money market fund at 0.02%?
Yep, because I'm going to get all y'all together and we're going to figure it out.
Loan denied.
I could beat 167 a month.
With 100K, y'all get that money, little Larry come back with a bag. Stop playing.
A grand at least.
Bro. Somebody get little Larry a call, right? Look at him.
You know.
Little Larry go out there in the middle of a pandemic and come back with that bag.
Yep.
And you finna be keeping your money in a bank at a 0.02% in a money market account when you can whoop that with your eyes closed, hand tied behind your back and everything. And
Yeah.
this is why this stuff is important. You better learn how to connect these dots, guys. We all have to learn how to connect these dots. Because again, the wealth gap is not getting shallow. It's starting to expand, just like the volatility in the markets right now. It's starting to expand. It's starting to expand. If we're going to play the finance game, then we need to know how each player has his or her mandate or role to play in this, because you're not finna win this doing what they call the ubiquitous way, right? Throwing that word around a lot tonight. You're not gonna win this game by playing doing this one alone. You're not gonna go ahead.
Said nope, that's been dead.
That's definitely loan denied. Put that on a circle on it and do a line straight through it. I'm not saying that you can't also use that at a way if you still in that lane, but it's gonna take more than you going to school, getting an education, getting a good job, and saving. Saving what? These people lapping you. These jokers jumping in from Wall Street bets last year, they lapped a lot of people that's been in the game about 15, 20 years in under 1 year. They lapped them. Trading what? AMC, GameStop, right? GameStop, Tesla shot went to the moon from $200 to over $2,500, right? These jokers came straight out of their mama basement and lapped a lot of people that's been in the industry or in the game, the workforce game, over 15, 20 years. They lapped them. Trading options and buying leaps and just buying in the money, and this stuff just breaking out because of all this craziness. And these people ended up with, 7-figure, brokerage accounts, 6-figure brokerage accounts. Like, make that make sense to me. No, I'm straight. I'm just going to save, bro. I'm just going to put my money in the bank and just save it. Save it. What the hell is that? Excuse my language. What the hell is that? Saving. Oh, okay. So you don't know about mutual funds? You don't know about stationary investing? You know how to do none of that? How to put your money where? You got $100K in the bank account, and you right now doing a low interest rate environment. You pulling down 0.02% on $100,000, and you winning. Make that make sense to me. It's not. So if you ask me, if we're trying to change the game, if you're trying to get ahead of the game much as possible, or at least keep up with the game, I'll say that much. How you gonna do that? Trying to play the how you gonna do that playing the role of the program role that they trying to funnel you into? You want to do something radical in your life at some point. Either you want to learn how to own your own business, right? Or get into some kind of form of asset ownership. Period. That's how you get ahead in life in America. Period. I don't. If you know another way that I don't know, somebody please inform me right now. Please, anybody. I'm all ears. What else do we have? How do you get ahead in America? Just work for somebody alone. Please, somebody, please give me some. Put me up on game. Without asset ownership, not just okay. Yeah, you buy a house, that can only go so far, right? We get that, but we talking about really pushing the bar, right? Really. Go ahead. Somebody say something.
I was just saying, you're right.
We talking about pushing the bar.
Add on to it. Yep.
Because these people got a steady flow every day. Every day they got a steady flow of taxpayer money circulate in around the marketplace without your say so. Did y'all vote for this? Anybody vote for this reverse repo operation? Did anybody vote for this? I'm sorry. Go ahead. Anybody vote for this? Who voted? Which one of y'all voted for this?
I missed the ballot box.
Bro, I was there. I was at Mr. Charlie. I was over there hanging out with Mr. Charlie. Mr. Charlie give me a hard time. I can't even vote on my own money, right? You know what I'm saying? Yeah. Last time I changed, none of us voted for this.
Yeah, I ain't get a text message or nothing.
Not a memorandum, not even a piece of paper clip on the nut on the board at the coffee cooler.
Not a smoke signal, not a nail.
Well, buddy said not a nail nutter on baby, not a nail nutter baby powder. What you mean not a nail nutter? That we don't touch not a nail nutter. We ain't get nothing. See how they do you? No, but we good though. No, we good. We don't need to understand stuff. We need to learn on this stuff, man. Nobody got time for all that stuff, bro. Move on with that stuff, Africa poor. Anybody got time for that? But I got to go over here and debate somebody on some stuff that ain't gonna give me no payout. I'm sorry. I got to go waste my time watching football. I ain't got time for that.
Yeah,
I got to go pay my emotional debt to society by being imbued with stuff that's going to distract me from being able to get to my bag. I'm sorry. When in Rome, do as the Romans do. Oh, my bad. I ain't got time for all that financial stuff. Get out of here with that. Somebody make that make sense to me.
maybe.
As the saying goes, it's fourth quarter, 7 seconds on the shot clock, and Joker's sleep. Scrolling Facebook, scrolling the grams, scrolling Twitter, lost in the sauce, waiting on likes, waiting to get, emotional credit highs, not financial payouts. As soon as the government, for lack of better words, screw you, then you want to get all up in your feeling, man. See, the government, they this and they that. Well, what you doing the other 364 days out the year then? Besides this one day when you complain about the government screwing you. Look, this is just a thesis, or it's a theory, but it's a thesis based upon what I've been able to witness since I've been in this. There is a proverbial reset button. Some people haven't figured out how to use it yet, or even that it exists. Y'all know what that proverbial reset button is? Anybody want to take a guess at that? What is that proverbial reset button? Anybody want to take a guess at it? Go ahead. Come on, we family, man. Take a guess. Seriously. What is that proverbial reset button?
It's that power button on your computer.
Which is it?
I said that power button on your computer to learn some of this stuff.
Yeah.
Power button. All right.
Or books, you know.
All right. Books. Anybody else? What is that proverbial reset button for our lives, essentially? Anybody else want to tackle that or throw out the idea of that? What is the proverbial reset button?
The ability to want to learn or open to learning it.
All right. So, all right. Ability to learn something, right? Ability to learn.
Find some like-minded people.
Committed interest.
Say it again. Was that last one over?
Committed interest.
A committed interest, right? Right.
Work on becoming financially literate.
Reset.
Right. Financial literacy, right?
That's the reset.
Right. Working on becoming financial literacy, work financial literacy, right? See, if you put all those, anybody else want to add anything before I say anything on that there? Hitting that proverbial reset button, right? If you put all those things into a basket, those things are definitely things that require you to have basically what? Interest to want, right? Patience and time, right? Or interest to want to what? Interest for what?
Learn.
Change, right? Or to learn, right? So interest for change or to learn, right? As we say, there's some things permanent, this permanent, that. There's only permanent interest, right? If you hungry, you're gonna find a way to eat, one way or the other, legally or illegally. If you get really bad, right? That's self-preservation 101. If you can't cut on that switch when moments when you're not starving and figure out how to utilize that to have an interest to change, you're gonna be in a world of trouble. At some point, you got to move away from being distracted to things that don't necessarily give you an ROI, return on interest or investment, or ROE, return on your equity, because you still hemorrhaging, right? You still, losing, right? Your outflow ain't your inflow ain't catching up with your outflow. You're not balanced there yet. You may be doing pretty good. You may have a good little salary, make a little money, good little job, but you still haven't figured out how to use the system to your advantage, because you still have yet to hit that reset button, right? To figure out how the game really works. Like all these things that you guys were naming inside this bubble here, this box, which also leads to you having the propensity to evoke change, to have the interest to want to change, right? Then you're gonna be stuck. Because I'm trying to figure out how we gonna get out of this hole if we don't have this all this right here that y'all put in this bubble circulating in our head to get us fired up to want to do something about it. Most people more inept to want to go back to just go back to sleep, right? Let me go back to being ratchet. I'm straight. I just can't do it, bro. I can't do it. I'm just used to working for somebody, and that's good enough for me. At the saying goes, you can't save them all. Why? Because the Kool-Aid that strong. The program is that strong. They get you at birth. Do they not? Go to school, get the education so you get you a good job, child. Don't you be out there listening to mother jokers. Don't be out there trying to do nothing strange. And no, play it safe. Play it safe. Don't you be trying to do nothing extraordinary. No, play it safe. Don't you be thinking about trying to own no business. You ain't built for that. Play it safe. Get your job, child. Get some benefits. That job got good. They got good benefits down at the factory. Pandemic hits, factory closes. What you got? Mom, I need to borrow some. No, you worked at the factory. Ain't you got some benefits? You ain't putting no money away for a rainy day? What you No, but you told me.
This shit you can't get here, man.
But y'all get up. I'm serious though. Y'all know how this stuff go. Cause a lot of us ain't ready. We talk about this stuff for a reason, right? Because right now the markers are the markers are essentially signaling to you what? We've been giving y'all all this free money for over a year and 5 months, just at an exorbitant high level in a rate. All you had to do was just buy a growth stock and just sit down somewhere. You got 100K in a money market account collecting, 0.02%, and you could have bought the SP 500 at a point when the Feds told you they're finna bring in the helicopter money, they're finna pump up QE, they're finna ratchet the reverse repo operation, they're finna start buying T-bills, they're finna backstop all our debt, monetize our debt. You could have took that 100,000 if you weren't even comfortable putting the whole thing in there. You could have put even half of it in there, 50K, right, or even a third of that, maybe 30,000, right? And guess what? The SP 500 basically went off the COVID lows up over what, about 120% at the peak to trough. So 120% of what? Of 30,000. How much is that? How much is that? Right. How much is that? That's close to around by what? That should be close around about 70, 80, 70, 70, 80,000, somewhere around there.
About 70, yeah.
Right. So we'll say 70K. So 30K turned into 70K in about a year and 4 months. Somebody make that make sense to me. Why that ain't strategic?
Well, you get 30,000 times 2%.
Somebody make that make sense to me. How that ain't strategic?
As opposed to a money market at 2%.
0.02%. 0.02%.
Yeah, 0.02% is only $600.
Ooh, why don't you?
As a man, so you made $30,600. Man,
Off 100K. Well, in this case, 30K. We use 30K rule.
Yeah. Wow.
Now, do you have to be a guru to know how to buy the SP 500? On a long-term investment thesis, I mean, you learn as you go, but still, in terms of looking at the historical context, in terms of how the SP 500 has outperformed the basic values of money market accounts and all these other little ideas of what people feel like they can get a little extra boost on their little dollars with. But just the stationary aspect of the SP 500 is supposed to yield you about at least about an 8-9% per annum. They say 7%, but 8-9%. And in this hyperinflated marketplace where things are going up, cost of living going up, of course you got to equate for that being a little bit more extra boost that you should get out of your market value too, because these corporations are using that money to build out this scenario, which obviously increases the price of stocks in a sense at a more hyper level than it was back in the old days. Things are not that much, they're not clogged up any longer. Markets are flush with capital. And everybody's still running to America to invest in our markets over their markets. Why? Because at the end of the day, this is the most liquid marketplace on the planet. So you sit in the breadbasket of one of the most lucrative marketplaces on the planet, and I ain't got time for that market stuff. That stuff gambling, but I ain't got time for that. I'm finna go get my 10% of my tithes. I need to go get this to Pastor Jenkins. I'm sorry. Pastor Jenkins, he got a direct line with Jesus. He gonna give me what I need. I'm straight. I'm gonna take this 20,000, put that in my offering. I'm gonna give that to the church. Jesus gonna give me mine on the back end.
Make it make sense to you. Wow. Slow down, African Portland. Slow down, man.
They don't want to hear us, family. They don't want to hear us.
Slow down, man. Man, oh man.
Even on a bad year, the SP 500. Show me the last time the SP 500 put out a negative ROI on a per annum basis. The last time we came close to breaking even, having a small loss of 2018 during the tariffs. But before that, 2017 was so big, it offset all of 2018, even with the tariff stuff, and you still came out ahead. Why? Because you don't go through a whole entire year and pull everything out unless you just feel like that's a moment you just need the money right away. You stay invested for the most part, and you just kind of DCA in, what they call dollar cost average in. You just increasing your principal value. Even with the value that you already had a substantial gain value, you just say, okay, if this was a stationary year because we hit this wall in terms of tariff, the next year it's going to what? Work itself through the pipeline like it always do. Why? Because these people got all their money in the what? The stock market. People who have vested interest to have big money and to get big payouts, and they understand that growth and wealth is built through using the compounded interest rule of law to get them bigger bags. They don't just tuck and run. They leave it in there and add more because they know it's bigger gains come down the pipe on the end. They don't tuck and run. Because keep in mind, if you had your money in the money market account, if you know you just working like you've been doing the same regimen, adding to your savings account every month or every time you get a little extra money, and you still get that old penny and a little punk behind, excuse my link, money market interest rate value, that still don't come close to that what the SP 500 can give you on on a bad year. And you still dollar cost averaging in your savings account, getting really peanuts off of it, and you could dollar cost averaging on the equity and get on a bad year, 3-4%, and still whoop your money market account. And you still doing this on and on and on every month. So guess what? It could be the same from that 2018 into 2019 into 2020 and into 2021. See how that work?
And what else you say? You really want to get dangerous, learn options.
That's next level. See, that's the part where we're trying to take the raw information, get you guys focused on getting hungry and serious about learning all this that you can so you know how to play the game more thoroughly and more consistent, right? And then you can start moving into other different strategies, different little asset class, different little derivative aspects of it, little options, little bit here and there. Of course, you don't never invest more than you have willing to lose. You take a little bit of it. You learn methodically. You learn enough about it on the back end before you get into it, hard asset value. And then you can start to utilize some of these peak to trough moments in volatile markets to kind of also hedge against some of that right? Some of all that other volatility against some of your long positions, so you can take that capital you got maybe put on the pullback and infuse it right back into the dip of the market of some of your long positions. See how that work? That's what big money do. They do that all day. That's what they do. They take credit and flush it into the cash, to the markets. We get credit. What do we do when we get credit? When we get credit, we go do what?
Go buy a car,
Shop, clothes,
jewelry.
yeah,
Bag of potato chips,
yeah, groceries. Yeah.
a Snicker bar. You stop at the gas station, use a credit card on a Snicker bar.
Yeah.
You probably got chain inside your in the ashtray or the.
Here, hit my
You
car.
want to look like a big dog at the cash register, pull out your credit card, just buy you a Snicker bar.
Mm-hmm.
They take their credit card and into the market. Before that bill come due, then they make them look. They pay that that balance off, and wait for the next month to go out there and hit it again if they even need it. At that point, once you get a leg up, they just put the credit card on ice and let that thing be a credit booster. They just playing off house money. That's another side of the game. But I'm just saying, there's so many different layers of this stuff. It don't make no sense. And a lot of us sitting there acting like we really doing it, but we ain't really doing it. We tricked on the delusion that we doing it because we got a good little job and a little piece of goat skin on the wall to say, I was able to get programmed really good and I got a little skill set. But outside of that, you ain't really benefiting off of it to the degree where you can leverage it on a real level.
Yeah.
Networking is cool, but that's a lot of middlemen. Ain't nothing wrong with that. If you that kind of person, you might like that. But for the most part, you still gotta what? Level up at some point. You gotta leg up. You ain't gonna do that waiting on, Julie, Jane, and Junebug them all the time. Sometimes you got to go out there and do your own thing. This is the only industry that gives you what? Complete soul sovereignty over your financial future. Am I lying?
That's right.
You have complete control, sovereignty over your financial future utilizing these financial markets. There's no middleman. None. These people don't know you from a hole in the wall sitting behind your screen of your cell phone, laptop, computer. These people don't know who you is. Which evens the playing field. Why? Because it's not even about congeniality. It's about performance. So, again, this is why, again, we have to keep reiterating a lot of that, because right when you think the market's like, okay, yeah, we get ready to roll over, fine. This is good. We need the market to pull back. Okay, that's good, right? We know how to play peak to trough, right? That's what we're studying for, right? We learning how to play peak to trough for a reason, right? When I say play it, meaning how to read those levels, right? How to use, again, these assets to our advantage. Again, as individual entrepreneurs of the marketplace, or as long-term investment thesis to kind of dollar cost average in on some of these scenarios based upon the rules of engagement. I mean, essentially, they're telegraphing in a lot of ways what they're gonna do, how they're gonna do it, because as we say, greed begets greed. These people greedy. Why? Because they ain't really having to work hard to get all this money. You think they're just gonna tuck and run and leave it? You think they're just gonna, oh no, I'm gonna get out now, I'm good, I got me enough. You think they're gonna do that? So everybody just gonna up and leave the stock market all at once now. Why? Because you decide to get in. Like, stop. Like, no, stop. Again, past performance is a predictor of future potentiality. All these tea leaves you see up here, this green tea and the blonde black tea, right? Call them tea leaves, the candles, right? This tea, you read these tea leaves, right? Spill the tea, all that, right? Spill the tea, spill a little tea, right? This is a part of you realizing your retirement is already wrapped up into this market one way or the other, with or without your consent. Your tax dollars and or potentially your 401k, TSP, Roth, or whatever. Your little drip, whatever you got, dividend risk program you may got with your company. Yeah. But yeah, you still need to also be in control of this stuff too. You know how to balance your checkbooks and balance your budget when it comes to your house bills and all that. What's different than learn how to look at these stocks and see it the same way? You don't have to be a complex trader and go out there and trade every little stock out there, know every little ticker like the way that some of us doing here. But guess what you can do? You can go right on out there and learn the basis of a lot of the stuff that make up even your job and working force. You might be in a technology laden industry. You may have a degree dealing with computer information science or cybersecurity, whatever. Well, guess what? You already know the lane. Well, what are some of the stocks that in that perspective or space that you potentially can invest in? You already know the space. You know who top dog, who best in breed. You start looking in the market, like what are some of the publicly traded companies that deal with cybersecurity? Oh, I keep hearing this company pop up a lot on TV or just in the newspaper. It must be getting a lot of attention. Let me go see what this about. What's this Palantir stuff? Oh, that's our competitor. Dang, they publicly traded. Look at this stuff. Oh. See, it fits the narrative of a lot of people, what they already like or love to do anyway. You could just be good at learning everything about this little one little company that alone. If that suits you, that's still good. Because if it has a compelling growth story, then yeah, you can still, you can really account for being able to put some of your saving value in an investment vehicle in this perspective and let it to kind of work in your behalf. And put stop losses on it if you feel, if you just skittish and not thinking that you're going to see. So this stock was at $8 when it IPO last year, October 2020. It went up at a high about 40 some odd dollars. So already you see that it went up over 500% from that perspective. And that happened in a matter of what? 2 months. In 2 months, it went up 500% from when it IPO'd, or they did a direct listing. Same thing, but it went up 500% in 2 months. You work at the Pentagon somewhere. You work in the cybersecurity thing. You just got into investing. Oh, somebody told me to get an investor. All right, Palantir getting a lot of government contracts. That's one of our clients. I'm gonna invest in it. You took that 100K you had in savings. You might have had two. I'm gonna put 100,000 in Palantir. It went to 500%. That 100,000 now turned into what? Into 500,000. You take that 500,000 or a portion of that and the principal you put in, which is the 100,000. Now you got $600,000. You take your 100,000 back out, or let's say you take out half. You take out 250,000. Now you got $350,000, probably in a mutual fund somewhere, collecting dividends or dividend base. Because you ain't crazy at this point. You're not gonna have it sitting in a stupid behind it, low fruit bearing money market account. Now you initiate it. You're like, oh, I got to put this money to work too, but in a more safer, low beta environment. And I'm gonna take this other value and I'm gonna mid to level aggressively still invest in it in some of these good companies. Or you just leave it in Palantir and you just let that thing keep paying. At some point, you're going to have to get serious about allowing that to happen. Because if not, they're going to keep trying to figure a way to dig in your pockets. One way or the other, they're going to keep. If you put it in the bank's going to take it and go invest with it. Dang if you do, dang if you don't. One way or the other. There's so many compelling stories out there within the market that gives you that kind of point where you can say, I know this industry, I know somebody. Let me read up on a little bit. Either way I look at it, this is my level up. This is how you level up. If not, you're gonna have to go out there and get you some properties underneath your belt. You're gonna have to go out there and start a business, right? You're gonna have to play the game in some kind of perspective. Outside of just, the work game only. Okay, the work game only is like, no, that's getting old. Anyway, so rules of engagement, understanding. When we see markets are performing the way that they're doing, and even though we may be hearing all this skittish conversation about, the markets are now getting ready to kind of roll over because of what? They Fed's finna taper. They're finna pull back the punch bowl a little bit, right? They're finna cut off the supply of drugs to the marketplace. That don't mean you just tuck and run. Typically, guess what? We make money going up. We make money going down. We still have a long-term growth perspective in play. Even if the Feds do taper a little bit, they all think the market just going to crash and go to zero. Obviously not, right? Who wants to buy markets at all time? However, you can get it at discount price anyway, because all it is going to be what they call the wash, rinse, repeat cycle. Markets move in cycles. So to put it in what they call a layman terms context, there's this thing called what? Anybody? What did I say right there? Anybody? What does that say? Anybody?
Boom and bust cycle.
What are boom and bust cycles? The very nature of the words itself tells you what's going on there.
Yeah, your highs and your lows.
Boom and bust cycle. When we the economy booming, and when it's what? When it's struggling a little bit. But guess what? Do you think people don't make money doing bust cycles? You think money's not being made even doing bust cycles?
Definitely is.
The same way money being made doing what? Boom
Booming.
cycles. We talked about the other day. I've been talking about it since February. We call it the what? Let me see if y'all remember. We call it the what? They supply the what? They supply the what?
The bullets in.
Remember? And the what?
Bandages.
And the bandages. They play both sides. And y'all better start learning how to play both sides too. We don't sit around and wait for everything to be hunky-dory, peaches and cream, pink daffodils and unicorns and fresh ripe apples
Utopia.
on the tree. Go ahead. I'm sorry.
Utopia.
Right. Because that ain't in the real world. That's the people that want to get caught up in the VR, virtual reality. That's the people that get caught up out there on the distraction. They just, that's people out there, whatever.
It's romanticism.
Right. We don't do that over here.
No, easily.
I'm finna prove it. Well, y'all already know it, but I ain't got to even talk about even prove it like that. COVID, we just went through a global pandemic. We're still in a global pandemic. The world seemed like it just crashed and went, burned and went to, again, quote unquote, purgatory or hell, right? Everybody's life been turned upside down to a degree, all this, that, and third. What did the stock market do doing all that?
Quadruple.
Wouldn't that not been like a bust cycle? Based upon the catastrophic nature of what we're dealing with for our supply chain, business has been shut down, global supply chain has been shut down, everybody's stuff disrupted.
Yeah.
The economy on a global level was supposed to be in at that moment of what? A bust cycle. Am I lying? Wasn't factories getting shut down? Planes got what? Grounded. Ships got what? Ships went to dry dock, right? Wasn't nothing moving. You couldn't even go outside to go fishing. I did. I'm out of here. I found a way. I'm out of here. I ain't got to worry about COVID out there on the water. But you know what I'm saying? They put everybody on lockdown. So essentially, if the world stopped, that means we were supposed to be going through what at that moment? A short-term what? Bust cycle. So I asked y'all, was money being made during the bust cycle?
Yes.
You couldn't go to work though.
Yes.
Your wife couldn't go to work. Your homeboys them couldn't go to work. They stuck at the house, PlayStation every day, worried, couldn't get toilet paper, nothing. But was that money still being made during the bust cycle?
Yep.
To the tune where most people made more money ever in their entire life during this bust cycle than they ever could during a boom cycle. Again, if you learn how to play the game right, if you initiate it, you learn how to what? Understand that this is a game of what?
Bullets and bandages.
This is a game of the bullets and the bandages. See, this right here eliminates implicit biases. You can't be all for the bullets if you ain't for the bandages, because guess what? People gonna take them bullets and what? Shoot your block call. You gonna need them bandages. So you better stock up on both. Is basically what I'm saying. You better learn how to stock up on both. Because they coming for you. They coming for your bank accounts. They coming for your savings account. They coming for your little degrees on the wall. They coming for your little skill sets that you may got as a carpenter, handyman, this, that, and the third. They coming for you. You better be ready. They coming for you.
From the ears of the
right? So that's the name of the game. So again, markers are not Teflon done, even though they are in terms of a colloquial sense, but they are just what they've always been. They're operating under the rules of engagement. We understand that there's always going to be what ebb and flows in life. There's nothing just linear. There's no just straight up. There's no just straight down. Life supposed to move in what kind of waves? Life moves in what kind of waves?
Sound waves.
Come through. See how that works?
Ebb and flows.
That's the universal sign of what? Sign of energy, right? There is not. It's a wave.
Sine wave, yep.
Now I got to go back. Our ancestors knew that way back, even before Kemet. They knew about that way back there. They call it the sign of what? I'm finna go there with y'all a little bit now. They call it
The
the sign of
sine
what?
wave.
This race is
They
done.
call it, say it. Somebody said what? It's now close. It's
Noon.
noon. What is the what? What is it? Where my Pisces people at? Or not Pisces? What's the sign? It's
Was
Noon.
that
basically what?
water
It's what? It's what?
versus noon?
It's the waters. Waters.
Oh, what is it? Currency.
All day, every day. Currency, energy, right? Energy, right? It's all baked into it. I'm going a little philosophical. I'm off script a little bit, but I'm on script. Y'all do this for a reason. I got to speak to my people the way that y'all used to hearing it, right? It's the only way you're going to make a likeness to this stuff, because when I see this chart right here on Palantir, what do I see? I see the waters of noon.
Mm-hmm. The transit of the sun.
Let me rub on my crystal a little bit here. Let me rub on Mother Earth, Mother Nature right now. Let me get my crystal right here. Let me rub on
Also the
somebody.
sun's transit. It's also the sun's transit.
I'm gonna be pseudo for a second here. Let me rub on let me go with pseudo on y'all. Let me rub on some of this stalactite here. Let me rub on some of this polymorphous rock right there, crystal here. Right? Right? I'm gonna take y'all back to science a little bit here. Juggle don't want to feel us on no kind of level. We're gonna hit them at every level. Right?
Are you crazy?
You know what I'm saying? They don't want to deal with us. They don't want to deal with us. When y'all come into the room, they're gonna be like, uh-oh. See, they think, look at them coming in here. Look at them. You see what I'm saying? You know how they face get all tight. Look at them. They think they know something. Look at them. I see him. Look at him. Yeah, I seen him. He posted a little stuff on Facebook today and made a little money, huh? You think he bad, huh? I see her. She think she cute, huh? Because she don't hang out the club with us no more. She just and trade and make money, and she don't hang out. She thinks she better than us now. I see her with her little self. That's when they get to call him old heifer. I become a heifer all of a sudden because I'm trying to make good decisions for
the end of October, beginning of November, that special event in stock.
Say again, Ebel?
Are you preparing us for the end of October, Halloween, and All Saints Day of November 1st? Isn't that a big day in stock market?
We talking about the October effect?
Yeah.
Well, we already admit of it now, because this month of October.
No, around Halloween time is another one. Like the 1st of November, I think it's something happening.
I mean, we got earnings coming up. No, but I guess enlighten us, my dear sister.
I'm gonna find it and text it in the chat.
Yeah, again, a part of our daily, game planning around being able to strategize. We use events too, of course, that markets are historical context of what have happened in the past, how people kind of look for it, right? Because we know we got what, Black Swan events. We have things that have happened historically, of course, in terms of the Black Friday, right? Not as a marketing PR stunt, where they kind of use that as a disrespect to a lot of our ancestors that was so basic after day Thanksgiving, right? How they walled it off and got out there and auctioned off slaves, and then that became what affectionately known as Wall Street, and also Black Friday, when they revamped their slave population. They took that money and put it right back in the stock market, right? They used to do cattle. Then that day was just specifically made for slaves. So how they look, it gets ugly. And then right after Thanksgiving, y'all run out and they go what? Black Friday shopping. Go juice to what? All y'all doing is juicing the what? The system. Putting money back into the what? Retail, which retail now translate that back into the what? Into the economy, right? Right back into the what? The machine, right? And then nobody is thinking they're gonna go buy the clothes, the pants, the game. Let me go buy the company, because this is their what during the shopping season. What is that for the company? Is that a boom or bust cycle?
That's a boom.
Is that at work? Whether they doing bad right now, doing COVID or not, they still gonna get a jolt of what? Cash, operational cash flow coming into their cash flow, because people gonna go out there and what? Steal what? Spend what? Spend money, because they're what? Their what starts with a P. Their what?
Program.
Their program. Because who tell you to go spend money? Starts with a T, ends with a P.
TV.
And that's even worse now. The TV and it's worse now because now guess who also throw it in there? Facebook, right? I call them Facebook, the gram telling you to go shop because they tell you that every day to go shop on the gram. Twitter, all that stuff that you're using. Right? Your family members, right? They so programming your family and
Everybody.
Notice that during those moments, nobody tell you to go invest in the stock market during that time. Notice that. Why they don't say, why don't you just go invest in the stock market? You don't need them items. No, John, I don't feel right unless I go spend that money in the store. I got to go get it to Mr. Charlie. I'm sorry. Again, I keep telling y'all the financial vanguard of the future. Y'all supposed to go break up all this monotonous, this culture of what they call generational curse habits. That's y'all job to break that up. Or we can do something different. We're gonna plan to put money away to vest with it or something. We're not gonna buy these overpriced. And right now, commodity prices through the roof. Y'all know how much the price of cotton up right now? The price of cotton is up over what 70, 80%. I think in the last couple months or so, somewhere around there. That means anything that you buying with cotton at some point when it moves through the system, the price of that stuff finna go up. Jeans, shirts, socks, all that stuff finna go up through inflation because the price of cotton. Matter of fact, look, see, we ain't gonna talk you to death. We just gonna hit you with that work. We're gonna put that work across your back.
We're already seeing the effects on the t-shirt side.
Got some entrepreneurs in the house. See how that work? See, we ain't gonna talk you to death. We just gonna hit you with that work. Because when we hit you with the work, ain't nothing to talk about. See? Ain't nothing to talk about when we hit you with that work. Let's come on down here. All right? See right here? They got cotton 1 and obviously cotton 2. Right? We'll use the regular basic cotton. We'll use cotton 2. Right? Just on GP. Let's go look at this little community, this little futures here. Let's put up the 1-day chart. Y'all see that right there?
Yep.
What day that is right there?
I ain't
Y'all see the
getting
date
that
on
right.
that right there? That's September 19th.
I was just, that's crazy because I was just looking at that the other day. And the Maverick, he was talking about it too, how cotton been shooting up like crazy.
Y'all know the last time a commodity like a cotton shot up this much, that fast, this soon, historically, in its whole existence? This over June to this point, it only went sideways. Then it went what? Parabolic. What caused that? Did that happen just because everybody got excited and went out there and started buying t-shirts, jeans, and socks and underwear and Brazils and everything else that comes along with cotton? That's what caused that?
Inflation.
Say it with your chest, Obi. What caused it?
Inflation.
Even worse, who caused it?
Feds did.
Say it with your chest, Obi. Who caused it?
The feds.
So we got a culprit that caused this, right? What did the feds do to cause that? Anybody?
Printing money, buying bonds.
Essentially, they took taxpayers' money and priced the taxpayer out of his or her own market. Raise the price of goods and services with their own money without their permission. And then you gonna feel it when you go to the store to buy your little jeans, your little shirt, right? Your little cotton swabs to stick in your ear and clean your nose with all this stuff. Even Q-tips.
So what you saying, over everybody getting hand-me-downs this Christmas?
I'm talking about going straight to the thrift store. Boy, you finna get in this car and go right on the Goodwill. Stop playing. But I want to go to Goodwill. I ain't gonna laugh at me. Look, bro.
Hey.
Good inside cutting up clothes like grandmother.
And it's
Quilts
funny.
and everything. Finna restitch the old pant. Look at him. We're gonna take this dollar here. We're gonna put this in the stock market. Cause apparently that look.
It's funny that you that this comes up. I was talking to one of my sneakerhead guys, and he was thinking that Nike and other retailers are raising their price on certain shoes because people are paying the resale price for them. And I was explaining to him that's not why Nike is raising the prices. They're raising the prices because inflation. Stuff is costing more to make and to ship. It's not because, people are paying crazy prices for a pair of shoes. It's because goods and services are costing more to make. So
that's Commerce 101, right? That's business 101, right? Again, see, people act like they don't know that stuff. See, they play that game in their head because they so used to being, oh, I'm in America. Everything everything is what bow tied and handed to me. I get to go to McDonald's at 2 a.m. in the morning and get me a McSlurry sandwich or something. I don't know. I'm winning. I'm in the land of milk and honey. I'm great. I'm straight.
I have to make slurmy.
Over here, we got, they got McDonald's, we got McDonald's. See, we got to go to Arcs, they got to go to Arches, right? See, they got the all beef patty special, salt little cheese. We got what? A soybean burger with some ketchup, mayonnaise on it, and some light bread or something. I don't know. And see that. Look here, Cotton Futures doing a subprime lending crash. It went from $40. It went from $40 to $226 doing QE2 because of the Feds jumped in, Ben Bernanke, those guys, and pumped the market, flooded the market with cash. Now,
that's crazy.
Rewind, literally 10 years later. About 10 years later, here we go. Here we go again. See how the market moving cycle. Now, this is all artificial, though. It's artificial because it's the Feds doing this. They pricing literally the already purse-stricken American citizen out his or her own market by printing all this money, diluting your worth, and then killing you at the gas station, at the grocery store, and at the retail store. Killing you. They're killing you at every level. And then look at y'all straight in the face. It's transitory.
Mm-hmm.
Smiling. It's all transitory. While CEOs ringing the cash register. Institutions are selling at the top, selling into the top. Retail trying to buy the dip, getting obliterated, and they just say, "Look at them, look at them, look at them scrambling, look at them." They ain't learned. They just we bred them right, we raised them right. They just gonna keep buying the dip. They don't care. They don't know. Again, what's tonight's topic again? What do we talk about tonight again? Somebody real quick. What's tonight's topic? I posted in the groups, of course, the title, what's tonight's topic?
Teflon Don Market or the Ubiquitous.
Read all of it. So read it all the way, everything, if you don't mind, one of y'all, please. I'm sorry.
Yeah, the Teflon Don markets are ubiquitous by the dip culture.
What's the other part? There's more to it.
The art of hedging revisited. Mm-hmm.
Teflon Don markets or by the dip culture. The art of what? Hedging revisited. Right?
Oh, yeah.
If you just buy the dip, at some point you're gonna have to learn how to what? Hedge the dip. Again, we just said we make money doing what cycles? make
Boom
money.
and bust.
Oh my God.
So
Boom and bust.
a bust cycle is when the market's going up or going down.
Down.
Fair.
Down.
And that means money still being what? Money still being made, right?
Been made, yeah.
Because how you make money when the market's going down?
You hedging.
Puts.
Bottom puts.
The puts.
Hedging and puts or short selling outright, naked shorting, right? Essentially, all
Mhm.
you're doing is just saying what? I need the market to get a little bit more cheaper
Yep.
because I still got a DCA, dollar cost average in. I still got a principal based investment, some of my grid investments that I got out there. I need them to come go a little bit cheaper. Why? Because right now everything uber expensive. It's been getting free money for the past year and 4 months. Just before that, even before that, but just exorbitantly because of the Fed. See how that works? Don't we like a good discount? Are we not good bottom fishers for a reason?
Mhm.
We don't stress out because the market come down. We get excited. I buy puts. I'm gonna hedge it. I'm gonna take advantage of this so-called quote unquote buzz cycle. Wink, hint, hint, wink, wink. That's what institutions are doing right now. They're recalibrating some of that cash, getting ready for let it come down some. We already rode the gravy train, gravy wheels biscuit, gravy wheels biscuit, gravy valley biscuit wheels. We already went through that. Unlimited printing by the Fed. The Fed said we just gonna buy everything. And they bought everything, even the kitchen sink. And Jiggle still like, man, I don't know if I could do that investing stuff, man. I ain't ready yet, bro. Bro, the market's still paying right now, man. Come on, man. At least buy a little Bitcoin or something. Man, I ain't ready yet, bro. I don't know yet, bro. Let me go buy these J's first, though. I'm straight. Let me go get the PS5 first. I'm sorry, my bad, bro. Let me go.
Mhm.
I got to go buy this video game first. So this, I got to go buy this coat real quick. Oh, my bad. I'll do it next week, maybe. See, that's what happened when you gonna hang out and what they call these the dead echo chambers that sit around talk about a whole lot of nothing. Ain't nobody really talking about how to get a bag, or they haven't figured out how to monetize their talking points. They just want to pontificate, and before you know it, you done wasted 5-6 hours in them little echo chambers. And what really came out of it? Do you walk out of there saying, "Oh, I'm finna go get this bag tomorrow. I'm finna go get this money," or you walk out there like, I had to get them 5-6 hours, man. Wait, I ain't ate nothing. I ain't took a bath. And then what? If people got time to waste like that, then life must be gravy. Because see, Wall Street don't take days off. The Feds don't take days off. Wealth generation creator values don't take days off.
Money never sleeps.
Money never sleeps.
Wall Street money never sleeps.
1.3 trillion. This is just one part of the game too. This ain't even all the other.
Yep. So 1.4 yesterday, 1.4 the day before that.
Small slice compared to all the other stuff, the fund managers and everything else that they doing, and the banks and other people. Small slice. It's just one little part of it, one little part, and knows that's a 1.3 trillion small part. Before you add in all the other stuff and the retail traders and all the this and the other people coming in the back door and this small sliver.
Can't even get that in my bank account, man. Taking my money and can't even put it in my account. Crazy.
Won't even get, see, you can't even go up in them just little banks because of COVID day in there still. And it ain't worth even.
Yeah.
So again, Teflon down markets or bottom dip culture. Basically, makes no never mind to me. Should make no never mind to you all. Why? Because we're opportunists. We're financial vehicle opportunists. We're looking for yield. The same way Wall Street wakes up every day. They're seeking alpha. That's what they call seeking alpha. You're seeking yield. You're seeking profit. Alpha. Makes no never mind to me. Going down, going up. Makes no never mind to me. Long term, it's sine waves. It's the waters of noon. It's energy. It's currency. It's ebb and flows. Above all that, I keep my composure. I focus. I realize that this is just a moment to get things a little bit cheaper once the dust settles. And I'm still gonna make money on the way. It coming down. We know what the levels look like. We're learning to read the levels. That's the part of the technical analysis that you do not slip on and you do not sleep on. We understand peak to trough. We know how to put the market in layers, literally layer it all the way down, right? We know how to use linear regression bands and cheat codes. If you look at this linear regression band with this stock right here in Palantir, what do y'all say right here? If I say, somebody take your pen, if y'all can, y'all got privilege to do so. Somebody get your ink pen right on this chart. Give me the peak to troughs inside the linear regression band, please. Anybody? Somebody give me the peak to troughs inside this linear regression band of this stock Palantir. Back up a little bit here. Sips tea. Somebody give me the peak to troughs. Somebody draw on the chart, please, if y'all mind. Draw on this chart here with your ink pens through the annotate tab. And somebody give me the peak to troughs. Anybody? Here we go. Somebody drawing. Make it look official if you can too. Round them things out. Like them rounded tops and rounded bottoms. You know what I mean? Put them rounded tops and rounded bottoms, I think, if you could. Put some respect on that chart, over.
Hold on.
You good.
Let's see. I can erase this.
Them peak the troughs. I mean, everybody can participate as well. You got the power to do that with the annotate tab on your chart. You're in the Zoom here. We are in a class session. Go to the chalkboard. Somebody give me the peak to troughs. Don't you get all brand new on me now. Act like you don't know how to use technology. You don't be acting like that when you be on Facebook scrolling all day, I bet you.
Right there.
I'll do one.
Right on
I'll let
it.
somebody else do the rest of them.
Yeah, right on it. You got the annotate tab on for a reason. You in Zoom. We in workshop mode right now. Right on the chalkboard. Somebody give me some peak to trough. There it is. There's one. Come through, over.
Somebody else can grab.
Mm-hmm. Get busy. Don't act like you don't want to go to work now. Now y'all too fancy right now, right? There we go. There's another one. Give me some peak to troughs on this chart. Give me some peak to troughs inside that linear regression band channel right there. Somebody, anybody. I need. We got some peaks up there. I need. Come on. There's a thing. It's peak to troughs. Give me that. Come through, over divine. That's what I'm talking about. Somebody else. Give me some more. I need. Give me all the peak to troughs inside that linear regression band, if y'all don't mind, please. If y'all don't mind, give me the peak to troughs inside that linear regression band. Right. We still got some, unclaimed money sitting off on this chart right here inside this channel. There we go. There's another one, right? Somebody got another one, right? We still some more money out there. Somebody inside the bands. I need, it's another one out there that's still left to be unclaimed. It's another side that still needs to be unclaimed yet. One more. Somebody give me that last one. Somebody give me the last one. Well, that can kind of go into the other, but yeah, that's still a peak though. You still right. You right there, over. Either way you look at it though. Even though you could use the next one, but that's still good. All right. There's still some money left out there. Still, somebody still. All right. It's still some more out there, but not so much there, because that's right at the linear regression band. Look where it's at. Right. That's kind of you sitting right there at the linear regression band. We're talking about peak to troughs, right? Peak to troughs are always going to be what? The extremes, right? When we say peak to trough, we're talking about extreme what? Polar opposites, right? right? Lows and highs, right? Because that's how we determine uptrends, and that's how we
It's right
determine
there.
downtrend.
Or
It's
you
another
see
one.
the first curve on the bottom. It's right next to it.
There we go. Come through. All right. See that? I knew y'all gonna fit. Complete this puzzle. See how that work?
That ain't another one, right? Yeah, right there.
Yeah, you can
That ain't
kind of
one.
play that one. Yeah, you can play that one. You can play that one too, right? Because if you blow it up, it'll look a little bit. I mess with the chart a little bit there. God, dog. All right, let me see. I'll move it back in there. There we go. Right. So, in those moments here, you clearly see. Let's see if I can blow it up a little bit bigger. There we go. It's gonna mess it up if I blow it up. So let me go back to the smaller side. All right. All right. So right there, right? Essentially right in this area here. All that right there is what? When y'all see that right there, now, if y'all will, just kind of step back and just look at that chart from the peak to trough moments. Right? What do you see in that moment? What do you see when you step back and look at it just from a basic optic, perspective?
Look like a face.
Well, but, I guess from an anagram, you looking from an anagram perspective. Again, not anagram, anthropomorphic, I forgot what they call it, but beyond that, too, of course, you're seeing, as let's say it before, right? We said it earlier, right? We kind of own our Kemet theme tonight a little bit, right? We see what the waters are what
noon.
Also, noon, which is also the determinative value of what ebb and flows, right? Peak to trough, right?
Right. Ebb and flows in the morning.
Lows and highs, right? Right? You got to what? See how that work? Currency generator. Support, resistance. Support, resistance. Back to support again. And unless something changes that, you're at the what? You're at the peak point of profitability back to the upside, dang there, because you're bouncing off what? Right? Support, or we like to call it what?
Resistance.
No, we at the support point now, right? We support the trough, right? Right? We add a what? Or some people call it what? A demand zone. Buyers step in. You with me?
Mm-hmm.
These are all known as, from a basic perspective or a basic understanding, these are known as what? What kind of signals?
Supports. You talking about the support? Those are buy signals.
Everything, right? And or bullish signals or buy signals, right? Y'all with me there? Anybody confused about that? Your risk profile is determined by the what? Past performance, which is predictive future potentiality. I already tell you that what? It seems to bounce pretty good at the bottom of the what? The little what? Support points or what? Resistance.
Support lines, yeah.
How many of y'all had to go to MIT to know that? Harvard?
It's patterns.
Stanford? Brown? Lehigh? Temple? UCLA? Florida State? Texas? Colorado? Michigan?
I'm still in community college. Yeah.
And what's funny is
PCC?
some kids is going to school for this too.
I can say peak to trough. Support, resistance, peak to trough, It's basically making the same pattern. Yep.
Say it what you said. It's a what?
It's basically making the same pattern.
Starts with a P. Patterns. I could teach a 7-year-old this. Where you see the patterns at, little Tyrone? I see it right there. Yeah, it's here, and it went back to there, and it came back to here. So you're telling me that when it gets down here, that's when that's supposed to give me $2 of my Monopoly money, and then I gotta wait till it get back up there again, and you're gonna give me more on top of what I've already given you for the. Yeah, that's how you do that. training them. It's patterns, it's trend, it's currency, it's the waters of noon, it's ebb and flow, it's peak to trough. Not rock science. You didn't have to go to MIT for this. Somebody gonna tell you that this is too much for them. They can't learn this. I don't know. This stuff complicated, bro. That's only old white men do that stuff. I ain't got time for all that, bro. No, I gotta go to the club. How many people took $100,000 down here and bought Palantir at the bottom of that peak trough right there? Understanding their risk profile puts them at the what? The peak point of profitability, right? Peak point of profit, because they're at what? At a buy signal, or what we know affectionately known as what level? Support. Your stop loss sits right at the base of that what? Oh, that support point. That means you had a back door behind you, protecting you. Does that make sense? Anybody? Does that make sense?
Yeah. Yes.
Yes.
Why you want to fight the market when the market's trying to tell you what it's doing? This right here requires what they call another P word. It requires what word?
Patience.
Yes.
Patience.
Yes, we use the Y. Yes, over here we use the Y. We use the Y over here, right? Right? For some of y'all may not be initiated, we use the Y. Y'all might not understand what that means, but that's what we use over here. I'm sorry.
Patience.
Right, right. You know what I'm saying? You know, just let you know we ain't illiterate, we ain't ignorant over here. We did that. No, that right. Patience. See? Oh, that's the 100,000 you sitting in your money market account collecting dust, roaches and rats eating off of it. You ain't getting none off of it. And here it is, that 100,000 right here at the bottom, Palantir at the bottom, that support point there, right? Because somebody taught you how to, read some good game, right? They gave some good game. Now you learn how to read some good game. You take that 100,000 sitting at around about $20 a share on Palantir, because it's at the support point, it's at the trough point, it's at the peak point of profitability off the lows. It's holding there. It's showing that it has some support there. It's showing that it has some strength down there. Guess what? You stop loss that thing anywhere below that, you got some protection on that money, right? Anything back up towards the top of that linear regression band is what? Profit. So that's an $8 move over how much length of time? So that's from August, right? From end of July, beginning of August, all the way to around till we hit the top of that is around what? September 17th. So that was every bit about a whole month and 17 days. About 40 days. 40 days, you gain 8 points. 8 points off that peak to trough move. 8 points. 8 points in 40 days. And 40 days, Jesus wandered through the wilderness, right? Was he in the wilderness for 40 days?
40 days and 40 nights.
40 days and 40 nights. Jesus wandered in the wilderness. Was he not? He didn't have no stock options. He didn't have his Robinhood account, no nothing. He just had some sandals, a knapsack. He was dressed in sackcloth. He had a banana and look.
No Jew exchange.
Go out there and maximize profits. 40 days, 8 points off 100K. 100K at $20 a share. How many shares can you get with 100,000 at a $20 stock? Somebody break that math down for me, right? $20 stock, you got 100,000. How many shares can you get? What math you do to break that down? How many shares you get with 100,000 at $20 a share? Somebody give that math. How many is that?
5,000.
That's 5,000 shares. Y'all got? Is that y'all with that? Everybody agree with that? Anybody some smoke with that? 5,000 shares.
Yes.
That's 5,000 shares you got with 100K at $20 $20 buy-in off that trough, right? That trough buy and support buy, right? You gain 8 points in 40 days by being patient, understand how to read tea leaves, checking in on your money, curating it like you're supposed to, right? You gain 8 points in 40 days. Again, Jesus was in the witness for 40 days, right? 8 points time 5,000 shares. How much is that? Somebody give me that raw math. 5,000 times 8 is what?
40,000.
How much is that over?
40,000.
Say it with your chest over.
40,000.
So you almost gained 50% on your money in 40 days. That's 40 racks you done picked up off your 100K that was sitting in your money market account collecting crickets, dust, and roaches and rats and maggots collecting nothing. Excuse me, and you didn't gain 40,000 in 40 days. You sell and wait for it to come back down, or you say, oh, now I got the door at my back at the resistance, right? Because then nothing gonna change the thing up here. I turn around and reverse that, right? I pull my 100K out, put that back in my good for nothing, do nothing Democrat money market account, right? I put that 100K back in there to collect roaches and dust. I'm gonna take that 40K. I'm gonna short the market back down to the trough again, because guess what? I'm at the peak point of profitability at the top side resistance. Now I'm gonna buy every bit of this stuff is sitting at let's say just on hypothetically here, it's sitting at $29 a share, $28 a share, right? We just say 29 for the sake of conversation, right here. Let me see if it hit 30. We got the 29.20 there. I forgot. Yeah. So 29.20. So we'll just say $29. We'll keep it case study accurate. $29 a share, right? How many shares can you buy of a $29 stock with $40,000? Now you got $40,000 in profit. You just picked up, right? How many shares can you get at $29 a share? $40,000, 29 shares, $29 a share. How many shares can you get? Anybody?
1,379 shares.
Right. So we obviously know such thing and how pregnant woman, either she pregnant or she ain't. So give me a round number.
Mm-hmm. Yeah, 1380.
13. What? That's no, because you can't round it up. Now you got to have that nothing equal out. Well, you add a little extra. We'll say we'll throw it in there. So 1380, right? 1380. Now you got 1,380 shares, right? With that 40K, right? Now you done wrote this thing back down from the peak back down to the trough. Now you went from $29 a share all the way down to this guy here, this little doji here. That was a low of 2307. So we'll say $23, right? So 29 minus 23 is what?
Six.
How much is that? $6, right? So that's $6. So now you done picked up 6 points back to the downside. How long did it take this thing to drop from 29 to 23? How many days? This is on the daily, right? So you got what? 1, 2, 3, 4, 5, 6, 7, 8. 8 days. In 8 days, he rested. He built the heaven and the earth, and on the 8th day, he rested. He kicked back, cracked him up a can of past blue ribbon, got his favorite little pack of Newport 100, got him some Vienna sausages, and cut on the Jack Benny show. Watch him a little Benny here, and he just kicked back and just chill. I'm straight, but I done built all that. I'm straight, bro. Let me go check my stock options. 6 points on 1380. What's 1380, right? Times 6 points. Somebody give me that math real quick. What's 1,380 times 6 points? $1,380 times 6 points. What's that math on that? Somebody real quick.
8,280.
8,280 bucks in 8 days. This took 40 days plus. This took what? 8 days. Markets come down fast and then they go up. We already know that, right? So guess what? Yeah. That 40 grand now picked up basically what? 8,280. That's every bit about how much of that turn percentage. That's what maybe close to what? Close to 10% there in there, right? Or excuse me, 25%, right? Excuse me, close to that of 25%, right? Somewhere around there, give or take, right? Now you got a profit haul of what? 48,000 in a matter of, give or take, we'll just say for the sake of just conservative value, or even, being aggressive, we'll just say what? 60 days, even though it's less than that. We know it's about 50 days, right? But I got to make the TV thing. I got to make this stuff sound good for TV, right? This being recorded. I'm sorry. Right? Y'all got to forgive me. Right? So we're going to say 60 days, right? 60 days, right?
Yes. 60 days.
That's every bit of how many months? Last time I checked, how many months is that?
2.
That's 2 months. A whole 2 months. A whole 2 months.
$8 grand. 82
right?
months.
A whole 2 months, you done picked up how much?
8,000.
No, you forgot the 40.
Oh,
Right.
48.
Right. Don't you short me. Don't you short me. Don't you, right. You know, Jiggle be at the bank. Don't you short me, bank till I know I'm supposed to get a little extra. That's the only time. That's the only time black folks show out when they go to the bank. They took it and gave you a little 2 penny. Don't you short me my 2 penny? Like, you ain't doing that when you ain't told you to get invest in the market. Now you don't want to do that. See how I blip? See?
Yeah.
48,000. You know what I'm saying? You can't, now you watching money. You're right. See what I'm saying? See how people live? We're gonna crack lid on tonight. We're gonna whip them tonight. We gotta hit them across their back with that truth tonight. We gotta hit them across the back with the book of Eli tonight. They ain't ready for it. Right? Right? 40 days, right? 40 days and 40 nights, right? 2 months, that's $48,000 off $100,000 initial investment. You put $100,000 back in your account, you traded, invested off the profits, and you took that 40 and picked up another 8,000. Now you're sitting on $48,000 in 2 months. This is pure technical analysis. Did you have to know the fundamental story why the stock was moving?
Okay.
Do you even have to know about who the CEO is of Palantir? Do you have to know what they do for a living?
Not at all.
What's the size of their bank account? Do they mistreat their coworkers? Do they mistreat, they don't pay their bills? Do they got what they did equity credit ratio? What's their PE? How many outstanding shares do they have? The stock, y'all with me there?
Mm-hmm.
Again, what school you had to go to learn this?
What University.
Come on in the room. Come on in the room. Jesus is my doctor, and he writes all of my prescriptions, and he fills my coffers with cash.
Yeah.
They don't want to get this work, family.
Yeah.
Man, I ain't got time for this stuff, man. Let me go over here and get my feel. Let me go get me some drama right now. Let me go look at somebody else doing bad right now. I got to go laugh this pain off, because I ain't making no money, and Mr. Charlie ain't cut my own check. Government tripping right now. I got to go laugh. I got to go look at somebody else's misery. I ain't got time for this financial stuff, man. Get out of here with that foolishness, man. I don't care about all that. Matter of fact, you got your vaccine?
Right.
What the hell they got to do with you getting paid? Vaccine don't make you immune to broke. Ain't no immunity. What the? Sips tea? Oh, we got time to waste. We ain't got no time to learn that, though. That's gonna put a bag, right? Get you a bag. See, when you put perspective on stuff, or they say put some respect on his name, meaning the charts and this craft, this industry that y'all here to learn, that we all here to learn, respectfully together, Ubuntu. Again, I repeat, Ubuntu. I am because we are. This is community. This is community, work right now. We're doing community work. Not in the making of having a little fun through all that. No disrespect to anybody, religion, race, color, creed, sex, gender, orientation, none of that stuff. Any of that, if I say anything, it's all in the aspect of a case study. It's to get you to get outside your comfort level and think. You got to start realizing that. See, again, none of that stuff at the end of the day really matter if you can't food, clothes, or shelter your scenario. All those, I'm not gonna call them trivial things in a disrespectful way, but all those things that can't food, clothes, and shelter you on a consistent basis. You need other layers. You need other perspectives. Again, I know that chart, all this still look like a mess on the screen, but it all makes sense to you all. Why? Because y'all initiated. See, y'all can look through all this, what I got up here. Each and every one of y'all now can look through all that right there and decipher that. Could y'all not? Everything I got scribbled up here, y'all could probably go through this. If y'all came into the bill late, at some point, y'all could probably unpack this entire puzzle and kind of see what we was talking about in this whole conversation, would y'all say to that?
Facts.
Yep.
Look like trigonometry to the unlearned.
Right.
Over Rich, could you unpack that if you came in late? Giving it some time.
Sure.
Sister Camille, could you unpack this if you came in late by any chance and wandered in on this? Could you unpack this by looking at this for a little bit?
No, I don't think. Oh, you talking about me or somebody else?
No, you. Like if you had came in late and you said, oh, let me see what they were talking about. Let me see if I can catch up. And you had to sit for a minute to unpack all this calligraphy on the screen. Could you probably make your way through all this at some point?
Absolutely.
Ober Brandon, could you unpack this if you came in late?
100%.
Ober Al, could you unpack this if you came in late a little bit?
Yeah. Poet Charles, yeah. Patterns. I probably can tell what y'all was talking about.
Right. Brother Divine, could you unpack this at some point? I know y'all still learn at different levels, but at least you can get through some of it, right? You can unpack some of it. You're like, okay, I could break down that little piece. I see what they were talking about right here. Could you break down some of this?
Yeah, definitely. Most of it, not all of it, but I definitely could.
Get some. Sister Shaniqua, I know you still somewhat at the top point. You might have to talk. She might be with the kids, but could you unpack some of this at some point, even at the level that you learning? Because you good with numbers, right? You good with patterns of change. Could you unpack at least a fraction of it? You on mute.
Yes. Just a
Right.
second.
And y'all, trust me, y'all ain't got to agree just for the sake of the bill. I'm saying it because this ain't outside y'all pay grade. That's what I'm saying. Y'all picking us stuff up. Sister Kiana, I don't know if you can open your mic or not. Could you unpack this if you came in late? If you had to sit there,
sir.
right?
Yes, sir.
Miss Monica Lamb, I don't know if you're busy or not. She might be busy. She was busy earlier. She might be busy. All right. Ober Chris, could you unpack this if you came in late a little bit? Decipher this puzzle a little bit.
Absolutely.
Brother Dundre, I know you still at certain levels too in learning. Could you unpack some of this stuff if you came in late and began to look at all this, what we're talking about?
Without a doubt.
Right. Ober Jeremy, could you unpack some of this if you came in late by any chance?
All of it. Sure can.
Right.
Yep.
Y'all know what this is right here? This is right here what you call, this is what they call money glyphics. It's a t-shirt moment.
I'm going for money. Money.
I was like,
Money glyphs.
Is this not money glyphics? That's the Greek way of saying it. We're gonna say it called what? Money netter.
Money netter.
The money netter. T-shirt moment.
Oh my goodness. I'm gonna use that.
T-shirt moment. They tell us that we can't get on code. They tell us that we can't have a off the script language that we all.
Is
this not money netter?
You just deciphered it.
Oh, but they tell you that we can't decipher it. Oh, we can't decipher our historical context, our historical language, and we can't decipher that stuff. We've been disconnected with all this stuff. All I'm saying is you have to make this stuff make sense in a way where you can get it and not necessarily have to feel like you got to fight to get it. It's not over your head. It's not above your pay grade. It's all in context. Now, I haven't done anything complex. We haven't went to options and broke down all this Greeks and all this stuff and understood, these different strategies. And I'm using some basic universal conversation surrounding around an energy that's in the market where these people have figured out one way or the other, they're going to be gainfully employed and utilizing this system because it's flush with cash and capital and liquidity, this, that, and the third, to benefit themselves at a very basic level. At a very basic level. That's before you get into the fine line strategies and you're using options and all that stuff like that. That's a keep in mind, you did that with raw cash. That's a raw equity position. 100K into 48,000 in a matter of about 60 days. 60 days. No, really 50, but 60. Had you bought options, well, you could pretty much what? 2x that, 3x that, 4x that, or maybe 5x that. If you 5x 48,000, how much is that? What's 5x of 48,000? Somebody, anybody?
48 grand times 5. That's more than that. 240,000.
Excuse me, say that again. Excuse me. But you
Yeah,
almost choked.
240,000.
So 240K, right? 240K off of how much?
48,000.
48 racks.
Man, 60 days.
Yeah, but yeah, it's really 50, but we're gonna say
50
60.
days. That's it. Okay.
We're gonna give them a grace period, right? Because they used to grace periods.
Yeah. Yeah.
But they tell y'all what y'all learning over here. It ain't amounting to nothing. You ain't better utilize that stuff. Man, ain't nobody that stuff. Nobody ain't gonna do that stuff, man. Ain't nobody got time for that, baby. Okay. Look here. Let's do this right here. Let's do that right there. Right. Let's see. Cut it off. Cut it on. What is that right there? What is that right there?
Resistance.
In layman terms, that basically means what? Buy signal. Up here is called a what?
Sell.
Sell signal.
So
You could teach a kid this, guys. Am I lying?
Nope.
Look, little Jimmy. When it gets up to the top of this line right here, that's when the party's over. That's when the ride starts. That's when the little machine starts. You got to put another quarter in, right? The ride is over, right? Here's when you sell it or you get off. When it come back down again, and that's when you get in again. Her eyes begin to get trained on those ping points. Here, there, here. And they eyes, they look at it as what? Zigzags. Right? When they get a little older and they get a little refined, they start saying, oh, let me smooth that thing out a little bit. Oh, it's sideways. Oh. When they get to where y'all at, then it's what? It's peak to trough. Right? It's supply demand, right? It's support resistance. Or it's what? Buy signal, sell signal. See, we don't have to chase the markets like that. Again, I'm using a basic terminology for this scenario for this reason, because again, Teflon done markets, ubiquitous by the dip culture, call it what you want, right? The art of hedging is alive. There's no perma bull or perma bear that really is about what getting the bag. You both, right? You both, right? You a hybrid, right? We hybrids. You're a bull bear, whatever that is inside of a science lab. I can only imagine, right? But yeah, you like, what is that? I don't know what that was, but I'm finna go that way, bro. I ain't even finna wait around and see what that is right there. They match that together in some laboratory, boy. Where these sides, look at him. Right? We both, right? I see this the same either way I look at this, guys, and no matter how you look at it. for whatever it's worth. You don't have to use this diagram. You don't have to use a linear regression band. You don't have to use none of that. Whatever, right? Makes no never mind to me. I see the same thing. And any value of you looking at this chart here, the ping points are just very demonstrative in terms of, top points or low points. Of course, it's a bigger ticket. This is a bigger opportunity. Obviously, in this case here, the time is more what? It's more, elongated in a sense, right? Because these are bigger peak to troughs inside of a micro peak to trough, inside of being able to even play off the top of the midline of the regression band, SP 500, right? In terms of you breaking or what or you continue on to the upside. Nonetheless, just looking at it even from this point right here, now that we back down from all-time highs, you making around the bottom here. We just had finished the inverse cup, inverse head and shoulders. We clearly, right? We called that yesterday, right? Bought some calls into it, right? I told y'all that, right? Before we got off the live yesterday, right? Some of y'all probably bought it too if you didn't or did not, who knows? But either way, it paid, and it literally hit our top resistance to the key. We was off by what? About a point. Right. That wasn't our, we did our part. That was up to the market. Take it the rest away. They just fell shy about a point. That's all right. We still got paid. Right. Still got paid. Right. Makes no never mind us, because we understand what again? We just talked about it on Palantir. We understand what again? We understand what?
Flows, peak to trough. Support and resistance.
I'm gonna throw a little extra on the back end.
Supply, demand. Whatever you want to use, all the same thing.
Waters of noon.
Come through with where the sister energy at?
The waters, sorry, the waters of noon. Currency, waters of noon.
Mutt Netcher. All right. Mutt Netcher. Come on, Mutt Netcher.
Moot
Netcher, right? Some say moot, some say moot Netcher.
Money Netcher.
Right? Money Netcher, right? And we start throwing the numbers up, then we start talking about what? Money Netter, right? Joker get to running then, right? Joker throw the numbers up there, Joker, I'm out of here. See, we built for this. We built for this, guys. Please convince me that we're not. Somebody please tell me that this is outside your pay grade. Please, anybody. Please tell me this outside your pay grade. Outside your competency level under that. Please, anybody tell me that this is outside y'all ability to reconcile this and to make this make sense. See right here? Right at that point right there. Off this breakup, above that 20-day moving average right there. Or into that, not above it, but going into that when the market bounced off that shoulder there. See, we buying all around here. We definitely buying above that right there. We clearly see how it's shaping out. I was freelancing a little bit yesterday. It was so crazy. I bought a 439. It was a 430. Yeah, it was a 439 at that point right there. That contract cost me 44 cents, or affectionately known as $44. That contract paid me today $370. So basically turned $44 into $370. $44 into $370 in less than 24 hours.
That's amazing. That's good. I mean, I've seen you do crazy. Like that's good.
Oh, that was in. That was just straight case study style, straight premium call by based upon the rules of engagement. I layered it on top of the news too, of course, and all that, all this hype. But beyond that, I was still playing the charts. I see the inverse head and shoulder playing out. And I know Wall Street is a greedy machine. This stuff ain't outside our pay grade. The same way it got up here at resistance, couldn't clear that, 443 to get back up near that line there. It stalled out about a point shy. It just got up near 44. It got up to like 441, 20, 441, 30, and just kept stalling out. Ping, 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 ping. When you have all that kind of pinging, typically you have what they call that triple top or quad top. That's resistance, right? If you can't break above it, that's instantly what? What kind of signal is that? It's a short signal, a put signal, a sell signal, right?
Sell signal.
So as soon as I saw that, guess what I did? I bought puts right there and rolled it back down on the back end of the day. Guys, we got this. We just have to keep doing this stuff over and over mentally. Again, if you're in paper trade mode, get excited about doing it. Again, I can't stress that enough. You got to play with the market. You got to put this stuff to work. Don't go out and be gung-ho if you ain't really ready to throw real capital. Utilize these skill sets and put it to test. Back test it. You could do it back tested in live markets. Use a paper trading account. Until conviction obviously overrides you to the point where you feel a bit more, comfortable being able to put a little liquid capital in the market, then so be it. But take your time because again, marathon not a sprint. Marathon not a sprint. Right? We end this. So the art of hedging is ever live and present because we're not sitting around waiting for the market to always just give us a complete buy signal to the upside. No, we're going to take moments when the markets are showing weakness and coming back down. As of today, the markets are still hitting what? Resistance around what price? That midline there, right? Again, until the market takes out, them guys right there, until the market takes those guys out, the market is still in the uptrend or downtrend.
Still in the downtrend.
How do we know it's market's in the downtrend? By what? It's what?
Lower highs.
By its lower highs. Y'all in agreement with that? Anybody know understand what we're talking about? A downtrend is established by what?
Lower highs.
Lower highs. Lower highs essentially just mean what? The peak of what? Or the peak of a what? Of a pivot. Or in this case, when we see that there, that's essentially what? An exhaustion of what? Buyers at that point, right? You can't really break above that point of resistance. That becomes what they call a pseudo peak. Until you establish a what? A pseudo trough. Until you have a breakdown. Either you're going to go lower or you're going to stay stagnant and go neutral or you're going to break out and go higher. If my resistance on paper is at 443, obviously I'm not making that number up. You see it there. You see this chatter over here to the left. Past performance to predict the future potentiality. Clearly, if you just make the line a little bit more, crisp. Of course, if we want to do that, we could do that. No big deal, right? We'll play that game, right? We'll put it right around. Let's see. Try making trades wouldn't be doing that. I just do it for that for now, just for now. All right. All right. So we'll take that line. Let's see if I can get it right at it. I have to slow the chart down to get it right. I just do it for that for now. No big deal. Right there. Until we break above that line right there. Matter of fact, let me clear all this calligraphy off this money net off the screen. right? I don't want to confuse nobody. Until you clear that resistance right there, markets are just still again in a lower high. We're still in the downtrend, and it's still game on. So if we keep playing the rollover game, or if we just playing the stall game, and we're gonna stall and try to test it again tomorrow potentially, until it break that line, guess what? It's still game on for potential downside. Here you just learn how to shorten the market and its value down to what? A smaller box. See right there? It's sitting right at the midline of this peak, this trough line here, this resistance line to the top side that broke into, of course, on the gap up today. And this is your what? Your downside resistance up here. So now your channels here, you split this thing down the middle, and you know your what? Your risk profile based upon the midline of the bottom and the midline to the top. Top line here, middle line here. You either gonna play from that point down to that support, break below it, a ping at it, which puts you right at what? Again, 434.88, somewhere around there, give or take. Or you gonna run up to what? Test the resistance of the day, right? You gotta take that out first, which is 441.50. If you take that out, then you can start maybe thinking about what? 443 potentially. But as of now, that's your most what? Current resistance is what? The previous daily highs. That's how you do that. The previous daily highs is the natural resistance, even though you have a bigger resistance right above that. You got to take those guys out first. If you can't take those guys out, the underboss, you'll never be able to make it to the big boss, right? You got to take the minions out, right? But that's how you play that. But at this point, you're sitting at the neutral position in the middle of this little channel here. That ain't hard to figure out. Is that complicated to y'all? How to dumb the market down and make it and put it into a box? Is that complicated to anybody?
No, not at all.
We learning that, because everybody at different levels. But I'm saying this, I'm showing you this for you have to learn how to what? Make the market make sense to you. As we say, find your own niche, but steal from everybody. This is how you can put the market. This is a high level complexity, astrophysics. This some high level MIT stuff right here. High level MIT stuff. And it's so complicated that you can teach an 8-year-old this. Boy, stop. They don't want to hear this.
That's classic. My son enjoyed that.
See what I'm saying? You can teach an 8-year-old this.
Well, that son is 33.
See what I'm saying? All this is doing is what? You're learning how to what? Let me put it in graphic term. Right? You're learning how to profile risk. Does that make sense? You're not driving blind. This ain't Ricky Bobby. This is not, I want to go fast at 5 years old in the station wagon. This is not Ricky Bobby. I guarantee this not. You're profiling risk by doing this. Does that not profile the risk in this whole setup right here, what we just talked about? Do you not know the resistance at this moment? Do you not know where the support is at in this moment? Anybody unsure? That means if you sitting at 438.60, even though it went up after hours, whatever, but that's where it closed at. If it's 438.60, the top resistance is the previous day high, which is going to be 441.50. That means that's every bit about what? About 2 points and some change, 2.7, somewhere around there, give or take, That means you got, we'll just say for the sake of, I don't know, for the rounding it to, the round numbers, right? And round them to get people in trouble. We can get ready to close out here, guys. I know it's late. That means you got 3 points, right? I'm rounded up. Yeah, 3 points. Okay, we'll round it up. You got 3 points to the upside at 438.65, right? And for the downside, you got, let's say 435, right? And you got what? 3 points to the what? To the downside. Y'all with me there?
Yep.
Does that make sense?
Yes, it does.
That's the middle. 3 points up, 3 points down. Now, y'all know how we like to back test this stuff by the what? By the flow charts, right? Right. That's how we back test it, right? We back test it by the flow charts, right? So let's take it to trial. Y'all want to take this thing to trial before we get ready to get off here, log off for the night? Let's take it to trial. What that song back in the old days? Take it to trial. Take that thing to trial. Y'all know what I'm talking about. Yeah. Right? I ain't got to use the word, but y'all know what I'm saying. Hey, like we too old, we don't remember some of this stuff, right? We all got history. Let's take it to trial, right? Let's take it to trial. Let's go on right over here the bar chart. Let's take it to trial. We said we got 3 points up and 3 points down, right? Is that number we're working with? That's what we're working with, right? Mm-hmm. Everybody in agreement, right?
Yep.
All right.
Yep.
Let's go see if the market gonna lie to us. If the market gonna make us out a lie, right? Contracts expire tomorrow. It's a Friday. We already know the business. We know markets are optimistic about all this Senate bill stuff and all this debt ceiling, this, that, the third, right? Right? So we playing, it ain't no 41.5, right? So we playing right at what? It's either gonna be what? 440, 441.50, or it's gonna have to be what? 442, right? Top side, right? Y'all with me?
Yeah, 441.
Yeah.
Or 442, right? Because it's 441, 50, 51. And you sitting at 438, 67 where it closed, right? So it puts you closer to what 442 than 441, 50 since we don't have a half contract. Make sense?
Right.
Yeah.
So for the sake of this right here, again, I want to make sure y'all clear that. So the 442 strike price for tomorrow's expiration is sitting at right here, right? How many contracts were bought intraday for that 442 strike price? $162,000. Is that the biggest intraday strike price buy in this whole stack on this flow chart?
Yes.
Yep.
Is that by mistake? Wall Street ain't as slick as y'all think they is. I told y'all earlier, this is some high level MIT stuff. You got to go to Yale, Brown, Cornell, Michigan, Howard, FAMU, I don't know, something. We ain't done yet. We ain't done yet.
MIT cheated too. MIT cheated, so.
Right? You know what I'm saying? We ain't done yet. Right? Now, of course, when you playing puts, when the markets are kind of rolling over, it's obvious that the end of money on the end of an expiration contract going to be very stacked because, again, you playing for the potential what? High point, peak point of what? Profitability, right? But for the sake of the case study, understand that we're playing within the box, a 3-point differential box, right?
Up and down, right?
You see what I'm saying? So we're playing within that, what they call probability what? Probability bell curve, right? Remember we did that a while back? I need to go back and doing that again. That you round it out, you split it down the middle, you have your slash marks inside that probability bell curve, what you're going to hit probably on the way back down, right? In this case, we're talking about 435, right? How many contracts were bought at the 435 strike price? Anybody, please? Anybody? Is that not it right there? Let me change the color there because that ain't loud enough. 435 strike price on the puts for tomorrow, right? Y'all see that right there?
81,331.
Is that the biggest inside of this whole area from here to at least the right there? Is that the biggest in there?
Yes.
Yes, sir.
Them contract cost 61 cents at the end of the day, give or take. You've already understood, you understand your risk profile in that. In terms of that, the risk versus reward in that is pretty good. That means that 61%, $61 has the ability, to yield, If it just yield 100%, well, you done doubled your money. If it exceed that, you know what I'm saying, guess what? You can end up, you know, $61 can easily turn into like, you know, 140, 150 bucks or not more. In the fact that the market rolled up, of course, the market still have to participate. They don't necessarily mean it's gonna be a binary event. But we just dissecting what risk, right? We putting together what they call a risk profile. Make sense? Not rocket science, guys.
Yes.
And see, that's how I did when I planned a little trade the other day when I was saying that. That's how I turned that $44 into $370 yesterday. I played the inverse head and shoulders. I played the neckline from the head to the potential top point of what it was gonna go if it could have hit peak performance. It stalled at a 441.50. No big deal. I take it. $50 turned into 370, made me some fishing money. So it's all in context when you can put it again all together. You see what's going on in the flow charts. You know how to now start looking at it saying, okay, what people money, where the money stacked at. Of course, the end of money area is going to be highly liquid on the puts because that's what the stock ended at. And then it closed around 438, 60 something, right? On the pullback from 441, right? Not rocket science, right? So yeah, that's just how to say, okay, these are my extremes, right? In other cases, now if you put that in terms of an option strategy, which option strategy would that be? Would that be a strangle or a straddle?
Strangle.
Say that again, Ober.
I believe it's no
You said it would be a what?
strangle.
All right. So what is the definition of option strangle strategy? Option strangle strategy. What is the definition of an options strangle strategy? Anybody, real quick, and we get ready to close out here. I know it's late. I'm sorry. What is the option straddle a strangle strategy?
Swallow one put. One thing like if you buy one call then one put at the same strike price. I believe.
Right, yeah, because you know what I tell you over there. You already know what to do, right? When we want to get that textbook, right? What do? We take that thing to trial. Take that thing to trial.
Investopedia.
Take that thing to trial, family. You already know, right? Right? Somebody give me that trial version. Give me that legalese version, that Black Law Dictionary version. What's that Black Law Dictionary version for a strangle strategy and options? All right. Let me go on over here. So that way I could do it with you guys, right? Somebody when you get it, somebody get it and read it. If not, I'll go in and pull it up and y'all can read it either way. You said over Rich, it's a strangle strategy, right?
Yes.
A straddle is a neutral option strategy that involves simultaneously buying both a put option and a call option for the underlying security with the same strike price and the same expiration date.
That's a straddle. What is a strangle? Somebody had the audio version. A
strangle is an option strategy in which the investor holds the position in both a call and a put option with different strike prices, but with the same expiration date and underlying asset. A strangle is a good strategy if you think the underlying security will experience a large price movement in the near future but are unsure of the direction. However, it is profitable mainly if the asset does swing sharply in price.
Think about it again, for lack of a better word, strangling, right? You putting a clamp on something, right? With inside of a box or a particular parameter of areas of support resistance in this case, right? In this case, we're talking about peak to trough, right? In this case, we're talking about performance values of the past where we hit a resistance and a peak, a support point where we bounce from, right? That ain't rocket science. We ID'd that. In comes the ideal of the strangle scenario, right? We know the resistance is at 442 or 441.50, and we know our support is at what? 435. See how that work? Now, both of them little contracts. Now, I'm not saying go out and trade these after fact now, but for the sake of that, the 435 put cost you $60. The 442 cost you what? $43. The 442, excuse me, cost you $42. If you fancy it, you can buy the 441. Ain't no big deal. $67, $60, $60 for the downside, $6 to the upside. You pay a every bit of how much for that? 67 plus 60 63 is how much?
About $100, $110.
Yeah, so yeah, 67.67 plus 0.63 is what?
Oh, okay. 130. 120 got me.
130.
Yeah, so 0.67 plus 0.63.
130. Yeah, 130. Yeah.
130. Yeah, everybody got
$130.
So that's $1.30 for that contract, which we know affectionately know in terms of contract value. That's what it's times what?
Times 100.
Times 100, right? 'Cause you get 100. So that's what 100 times 130 is what?
$130.
So you spend $130 and you get a what? What kind of strategy you just got? You got a what kind of strategy?
Strangle.
A strangle. on a what? A well-defined peak to trough of an SP 500 contract going into what? Into a Friday expiration where you've already defined your what? You defined your what? You've already defined your what? Your what?
The risk. Your risk.
Y'all running a business. Y'all running a well-tuned business. This is what executives do. This is what CEOs do. Y'all MIT stuff. Did we not just do that? We're writing code, guys. This is code. Y'all coding. And if. Loop back. Two seconds. Go back to the chart. See right there? There it is right there. That's your box. That's your penalty box. That's your gun line box. That's what they call the what we call it back in the day. We used to call it the kill box. I'm sorry, that's the kill box. Go back to I got to use some of that military stuff. That's your kill box right there. For lack of a better affectionate term, no matter some kids might be listening. That's the play box. I'm sorry, that's the play pen. That's the play pen. That's the play box. That's the gun line. Now, I got to ask y'all this. And this is just before we close out. How many of y'all think the market have a more than a 60 or 50% probability of tapping either the resistance tomorrow or the support tomorrow? Do y'all think that's greater than 50% or at 50% or less?
I think it's going to be less because job numbers come out tomorrow.
So we got a catalyst, right? We got something to move the markets, right?
Yeah.
So if the market's going to move tomorrow, that means there's a high probability that the market's going to either go up to resistance or down to support, at least.
By the candles, it looks like it's going to go down to support.
Again, whether it be directional bias or not, right? Meaning which side, right?
Yeah.
But in terms of probability, are we not at least more than 50% greater that we may either tap the resistance tomorrow or tap support? Is it more than 50% chance that we may do that? Like you may say 50% chance of rain. I'll just say that, right? Is there more than 50% chance of rain that we gonna get some rain tomorrow in the markets, right? One with the other.
Yes.
So yes, over the brother Rich, over the round, y'all see, right? Now I don't mean it's gotta be tricky in nature, but
I would say
I say no.
I said tap support.
Now, like I said, this is not a directional bias either way in terms of what I'm asking. All I'm trying to ascertain is it a high probability that we're gonna let me change. Is it a high probability that we're gonna either tap that resistance or break above it, tap the support or break below it? Is it okay? Let me even dumb it down even more. Is it high probability we're gonna gain more than 3 points in the market tomorrow, up or down potentially?
Yes.
Yes.
Yes, definitely.
That make more sense, right? So 3 points, one way or the other, right? Now,
Oh,
if
well,
that
you said, yeah, okay, I got you. Yeah,
you see what I'm saying?
50%.
You see what I'm saying? That yeah,
Yeah,
50%.
yeah.
Right.
Yeah.
I'm using the probability bell curve at this moment, right? I should have
Yeah.
said it that way, but
I
if we
say
did,
yes. I say yes.
right? See what I'm saying? Now, see, that's why I say good, this stuff ain't right. See, this is why y'all also, because it ain't hard to kind of see what's going on once you can put the market into inside of a risk profile or kill box, right? We got a kill box right now, do we not?
Yes.
And I just said this earlier. This right here gonna make Sister Angela, and we're gonna get off here, guys. It's late. I don't want to keep it no long. Because guess what we got? We got what?
Oops. And bandages.
And we got the bandage. Do we not?
Facts.
Yes.
Do we not?
Yes, sir.
We sure do, because we got what? Them bullets for that what? For the resistance, right? Shoot their resistance, shoot their house up. And we got the bandages for the support. Because you get your house shot up. Somebody go get him off the battlefield. You ain't got they put that shot up. Somebody go get it. He went out there with a slingshot, and one of them boy got them revolvers, boy. They went to He got this throwing rocks in them juggler. He wasn't ready. Somebody go get him. Put them bandages on the back because you're gonna need them. See, that's why that strangle, see what I'm saying? That covers that. That's what a strangle is. It's the bullets and the bandages. Make sense?
That 2 days ago.
That means you what? You pause and you position for both sides. And all that costs you how much?
$130.
130.
With the potential that you can what? Make at least 50% or greater, potentially. See how that work? Even if you make 50% of 130, how much 50% of 130? That's what?
That's 65.
65.
That's $65 off of $130. Is that not good risk versus reward ratio?
Thanks. Okay, so
it's somebody
that
ain't
could be. That could be for the straddle or the strangle.
Well, this is strictly the strangle pattern. But if you use the straddle, then that means you what? You basically what? You pinching down your kill box.
Yeah.
Now your kill box come in like what you call a standing fighting room. Now you in that juggle like this right here, like with Martin who was fighting when he was fighting that rat, and that rat was y'all remember that episode? And Martin was looking, boy, that juggle.
That's with two different strike price on the put and the call option. Right?
That's the same strike price. A straddle is, you see what I'm saying?
Yeah.
A straddle is the same strike price, put and call. That means you buying basically what? The equilibrium place, right? Wherever it rested at. So if it's
the straddle, the straddle is the same strike price, and the strangle is different strike price.
Right, based upon the kill box. So that's what the kill box. The strangle give you more of a perspective of a kill box. Straddle gives you what? Wherever we closed at, I'm about that put and that call that same strike price. I'm basically trading neutrality into the tomorrow movement. Does that make sense?
Right. Mm-hmm.
So wherever it began to kind of stretch out from that point, that means I got to close the other side, or it's going to basically go to zero. Or you can let it go to zero, and you either make the money on the other side. If you stretch out long enough to at least make a profit off that. That's what the importance of a strategy position. Strategy, excuse me. That makes sense?
Yeah.
So in terms of you running this business, online business, if you have to put up $130 with the potential to make 50% based upon, you being able to put this together, this trade together, y'all see what I'm talking about, right?
Yeah.
Like $65. That's
I I gotta ask y'all this here and get ready to close out. Does this seem like gambling to y'all? Or does this seem like strategy to y'all?
Strategy.
Strategy, definitely.
Does this
I
seem like
know.
you run?
Yeah.
Go ahead.
This ain't gambling. I know what gambling is. This ain't it.
See what I'm saying? Y'all done been to Vegas. Some of y'all been at the dice game with Lil June, but them. This ain't this ain't no CeeLo here. This ain't no look at this ain't none of that. Right? This right here, high level MIT stuff.
Right.
Right? This money nature. Right?
Money
This money
nature.
netter.
Yeah.
Right? And money nature and money netter. Right?
That's a shirt.
All day, every day. See what I'm saying?
Yeah.
Your risk is already defined. You got a back door and a front door. You got a 3-point window. You got a market that's going back crap crazy, right? And you got people that want to get paid one way or the other. And again, this is you running your online business. That means your budget for the day, you running an online business, right? So you got a lot for a certain budget in the day to go out there and handle your business if you run the business, right? That means you take $130, go down to the what? The Continental Swap Meet or Canal Street, New York, get you some product, and you got to go hit the strip and what? Get rid of that product, right? You only pay $130. All you want to make 50% of your money back, right? But you got the potential to make what? Greater than that, right? It could be, if you make 50%, you did a good day. It can be 100%, 200%, 300% before you know it. If the market get out of control, guess what? Makes no never mind you because you have to pay a whole lot, right? Your risk versus reward ratio puts you in more of a what? A win ratio perspective. Make sense? Now that's just 130 lot, right? That's a 130 lot, meaning that's a $130 lot entry price. Does that make sense? Well, imagine if you time that times 2, or maybe times 3. Y'all see where I'm going with that?
Right.
Or times 4, right? What's 4 times 130? 4 times 130 is what?
It's 520. 620. Yeah, 520.
520.
520. It's $520, right? That's $520 for four lots of a 130 what? Stringer strategy. Make sense?
Yeah, right.
Again, 50%
times 5.
Right. The easy way to do it. My man, he already on top of it. What's 65 times 5? Or well, before, excuse me, it'd be times 4. Excuse me, before.
Times 4.
Right. What's 65 times 4?
1, 2, 3. 320 is it?
65 times 4 is what?
65 times 4, what is it? 320?
Right, you got 0, 4, 5 times 4 is 20, right? You put the carry that 2.
260.
What's 2 times 4? 260? Is that we got 260?
Yeah.
So that means you make $260 off of what? 520, right? That means you put up 520 and you was able to what? Profit 260 off your what? You run your business for the day.
50% return. And that's great.
So in terms of risk versus reward ratio, what ratio is that? Somebody give me that ratio. What's the ratio of a 50%? That means you put up it's close. No, close. The close. You close, but
1 to 2.
If you get
50%, 2 to 1.
Right. Say again. Somebody said it. Say it again.
Is it 2 to 1?
That's a 2.
Yeah.
2 to 1.
2 to 1 ratio. Now y'all talking high level complexity MIT stuff right now. But y'all better stop with that golden ratio stuff. Y'all nothing about that. Y'all nothing about that golden ratio 9 ether. That pi. Y'all better stop playing, boy. This outside y'all pay grade.
Who you saying? Who taught y'all quantum physics?
Who you taught y'all that quantum fitted stuff? Y'all better get on out here with all that quantum fitted stuff. I ain't got time for that. Give my Bible. Give my Bible. Right? I'm gonna exercise y'all up out of here in my house. Get up out my house with that devil stuff. That's the devil ratio.
Give my Bible.
That's a 2 to 1 ratio. Is that not a good ratio, guys? Anybody? Is that a good ratio?
Yes, sir.
That's a doggone good ratio. Y'all know what the national average is for Wall Street in terms of a good risk versus ratio?
Is it 1 to 1?
Not Wall Street. Well, you know if they boy, look, you know if 1 to 1, but everybody be
killing
it. We be killing it. Well, but we do that. We do that a lot on our side. That's why it ain't uncommon, right? We used to get 1 to 1. Hey, ain't enough for me to do what 1 for 3. I be doing 1 for 5. I done 1 for 6. My biggest was what that time I bought them STLP stop.com them puts in the earning. I turned that $100 into 8,000. Them contracts cost me 20 cents a piece. I bought 5 of them in earnings. That thing dropped about 50, 60 bucks somewhere around. I forgot. I got it on my Instagram page. I turned $100 into 8,000. That stuff ain't. I did today. I just turned 44 into 370. Well, yesterday, less than 24 hours, I bought that 439 call, and that turned into what 370. It ain't uncommon. Is my point. But here, at least you have the probability to be able to do so, given them the rules of engagement. See how that work? Can you do that on the job? Can you magically turn your 8-hour work shift, which let's say you get paid, $20 an hour? Could you take that 20 times 8? 20 times 8 is what? That's $1.60, right?
Yeah.
So you make $1.60 on the job, right? Just working 8 hours a day. Could you magically take that, them 8 hours, you normally get paid, principal at $20 an hour. Could you magically morph that into like, I don't know, but 260, 280, somewhere around there?
Oh. She
Last
working.
time I checked,
She on the clock.
Last time I checked, look, you go in there and try to cook them numbers you want to, Miss Charlie gonna have you out that door so fast. Right? Right? Over here you can though. He was only gonna pay you $1.60 for 8 hours of labor.
Mm-hmm.
You put in $1.30, at least you made 65. There ain't no portion of that just by, sometimes that can come in an hour in the market. It can come in 2 hours or 30 minutes. Y'all get my point. 520 can bring you 260. You done made a whole $100 more than what Mr. Charlie gonna pay you sitting there watching the paint dry at the clock. I ain't telling y'all to quit y'all job tomorrow, but y'all get my point.
I quit.
Right? It's enough to make you want to quit, ain't it? 250 bring you about 25K at the end of the year. If you can make $500 a day, that puts you up about how much? No, 20. That puts you at what? What's 500 times? It's 252 days out of trading year, right? A lot of trading days out of the year. 252 times 500 is what?
400 puts you at 100K. 500 puts you at.
Right. So it's 252 days out of a trading year calendar. You got 252 days. All right. If you can make $500 a day,
126,000
times 252 days. What's 500 times 252?
We say
126,000.
How much is it?
126,000.
Yes,
so that's 126K per year. If you figure out how to make $500 a day out of 252 days out of the year.
Easy. Easy.
All I'm gonna say is y'all on y'all way. If you ain't already getting there, if you are not already there. Why? Because you got time on your side. You got look. This the mathematical formula here. This high level MIT stuff. I got to keep saying that for a reason. It's this complicated to y'all at the point where y'all picking this up now. Is this over anybody's head tonight? Is this outside y'all pay grade?
Nope.
Did any of y'all have to go to college to get this in?
No.
Did you have to go into debt to find a way to get out of debt? They end up in more debt to get this here.
Nope.
Some of y'all got $520 right now in y'all savings account, collecting dust, getting roaches all crawling all over it and everything. And that potential can yield you about $260 tomorrow, about 50% of that. In less than 24 hours. Buying 4 lots of a 130 strangle scenario. Let that marinate for a moment. That means you almost what? You halfway to getting that $500 a day off that 520, which puts you close to the goal of potentially being able to make over 100K utilizing the market. Okay, even if they tax you 25%, they say on capital gains, right? What's 25% of 126,000? Anybody? What's 25% of 126,000?
13,500.
So that's 13,500 says 126,000 minus what? 13,005, right? 13,500, right? How much is that? What's 126 minus 13,500? 1, 1, 3, 5, right? So you still walk away at the end of the year after they didn't tax you what with 113,500. Because some of y'all live with that.
Yep,
Sure could.
Could y'all do a little something strange with a piece of change if y'all had that? And you can still be working for Miss Charlie. Giving them the evil eye, Larry. That you got one more smart comment, Miss Charlie. I'm gonna give you the pink slip.
One more time.
You got one more time, right? I'm gonna give you the pink slip. Now you keep playing with me. Yeah, you look at keep playing with me. You walking by y'all scared and Tim like, okay, my bad. Move on, bro. I'm sorry, my bad. I'm gonna need you to get on that lathe tomorrow a little bit. I need to go on the crane tomorrow. My bad, bro. You got one more day, Mr. Charlie. See how that work? That means you got what? In closing, this part when I wind up the sermon, right? I know I've been going in tonight. I've been preaching from the tabernacle tonight. That means when you establish that kind of level of what? Leverage in life, that means you establish what? It goes back to our mantra, right? Of course, this is a little mantra I use a lot. I know we use it in our little collective value, but let me clear the chart for this right here so I can close out here. Come on. I need somebody to play the organ here. Where my deacon at? Somebody give me that organ. I'm gonna need y'all to crank that organ up right here. In closing, right? But you're gonna take that handkerchief and wipe your forehead. You be sweating bullets up there. Right there, you be hitting that pulpit like that right there. Like you know you finna tighten up now. You finna get right before you get ready to close out. Like,
Amen.
you get to shaking that head. But see, when you do put all that together and you establish and leverage like that, that gives you what? We talk about a lot, right? When we say it's the reason why, we use that mantra for a reason, right? But in this case, of course, and again, under the blueprint of what we're here for, we understand that what, right? That word right there, right?
Knowledge.
That's prerequisite. You can't skip that. Stop trying to skip that. Look, it's so crazy, right? Y'all already know. I'm not even finna allow you to skip that, not on my watch. Because ain't nobody finna be coming over here talking about something we over here talking that what? Can't nobody come at us sideways and say that we over here what? Gambling, or we ain't what? Learning this thing what? From the ground up. Make sense? They can't come at us. This ain't none of that. Again, ain't no shots fired, but I'm gonna throw a little shot fired out there. That ain't the other stuff out there the people out there doing. I'm sorry. Right? I hear that organ in the background. Come on with it. I heard it. Right? I heard it. Right? See, we don't skip this part here. We don't skip that. Right? Woo, boy, somebody give me that clean ice water and that. Right? We come, right? We lead right out of that knowledge and we go right into what?
Power.
Power is what we consider to be what?
Leverage.
Speak the truth.
Oh, fool.
I'll say. Somebody got to hit them drums right after.
I'm talking about no disrespect for you if you're a religious person, but again, hey, we just got to go there. Right?
That's hilarious.
Right?
Power equals profit.
And when you
Now
make it to that profit stage, right? You establish the prerequisite to get knowledge. You got the leverage when you got the power, and when you make it a profit, that means you what?
You arrived.
Insert your own aspect of your success level at that point. Because guess what? At that point, you become. I'm going to put it out there the way what it really is. You become a what?
Made.
What a seasoned investor.
Savvy investor. Amazing.
It's interchangeable for the sexes too. Man or woman. You become a made woman or a made man. Am I lying?
No, you're quite right.
Because that means you can summon money whenever you what?
Want to.
Anytime you want to. I'm not talking about holding the little root bag. No disrespect. I ain't telling you got to go out there and do all this hanger, jenga. I ain't talking about no disrespect. You using knowledge to bring you what? Power, which gives you leverage. That means you could tell somebody can what? Kick rocks. You can fire your boss because you have the ability to summon what? Profit whenever you want. Why? Because guess who gonna pay that, cut that check?
Market.
Find me another profession where you become a made man or made woman when you get to summon money when you choose. I'll wait.
Right on time. Preach, brother.
I'm talking about you been eating a pig feast all day and you sweat.
Yeah.
You sweat because you're hot. You sweat because that pork tearing your skin. That pork tearing your guts. So that's what I eat all that pork. You got the meat sweats up there. Somebody straight chitlins and ham up there on the pool pit. Boy, I ate all that mullet dinners and pork sandwiches all day.
The mullet dinners.
Got you sweating, boy. That's funny, boy. Stomach cutting up and everything.
Oh, to my look at him.
He got to go to the bathroom.
He can't wait. He trying to cut it short. I need y'all hurry up because I got to. Boy, look at him. Boy, the bathroom calling me. Boy, see, this is what we here for. This is what we come here for, guys. This is why we sacrifice. Make sense?
Requisite knowledge.
Leverage equals. Yep. That's where you get the power. Because when you got power, think about this. This is a corporate conversation. I've been there. Own business, been with corporate partners. Y'all, some of y'all in y'all profession, y'all know how this stuff go. Y'all know what, if you're on a job, anything that you can leverage is a form of power. Make sense? Of course it is. That's what racism is. Racism is leverage. It's a form of power. They got control over your housing, your food, your medical, they got a mandate for vaccines right now. I'll leave that alone. Oh boy. Fade the black boy like Jay-Z over here, boy. Now run, boy. I'm talking about they run on that organ. Jokers ain't ready. And again, boy, jokers ain't ready, boy. Hey, I grew up in the South, but y'all already know what it is in the South. Where look at all day, every day, church, all day, every day, no days off, right? Essentially, that's what we're here for, guys. Because when you make it to the point where you can summon money, you become a made man, a made woman. Look, I don't care if it's 260. I don't care if it's 100. I don't care if it's 65. I don't care if it's 50. Because guess what? That has the ability to multiply, does it not?
Yes, sir.
This is the tabernacle of getting money, right? Y'all already know what it is, right? Y'all already know what it is. The tabernacle of getting money, right? Presiding over the sermon today is Rem support resistance. Rem support resistance. He coming through the speak tonight. Rem support resistance. Boy, look at him.
Oh, you gotta make a shirt. That's dope. I like it.
You know what I'm saying? Rem support resistance. Boy, Joker, they don't even understand what that means. But like, what are you talking about? So Rem support resistance. That's outside they pay grade. Because we read the money net over here.
Yes.
Right? Because y'all know at the end of the day, this, see, they can't stop us because we the what?
True.
You get money tabernacle.
Money crack.
Tell me we can play the game too.
Money nature.
We the money crash and we read the money netter every day.
Right.
Every day we read the money netter. And then not now one of us had to go in the debt or in the college to some level to that regard to have the position to have this kind of level of what? Knowledge, power, or profit, right? That's why we say power and profit for a reason. Right? That's exactly why we say it. Right? So I'm closing out. I think we understand the nature of why this stuff is important. Need I say any more? Why the need to take it serious is pretty much what, in my opinion, I consider it to be something that's close to, look, it's near life or death. Because if you don't leverage them, they're going to leverage you. I mean, who wants to be, we grown people. We grown behind people over here. Who wants another grown person having that much leverage and power over them? I'm just saying, your gateway is over here. The world riches and wealth is stored in what? Assets. Appreciate assets. Stock market is another extension of that. Pretty much, it's the only game in town actually right now. So we know what to do, guys. Study. Don't look. It don't take a whole lot to go through this stuff in your free time. Carve out you 5, 10 minutes, 15 minutes, 30 minutes a day. Go dig into this stuff. Get into those charts. Again, link with other people in the groups. Hey, y'all, let's do it. You got some time tomorrow, man? Let's do an independent study scenario, man. I got 20 minutes. Okay, great. Let's go. We'll go live. Wherever you at. See, that's what I was talking about. Community, Ubuntu. You got to use each other in that perspective too. You can do it on your own course, but that's why we made this community the way we made it, right? Where it's clean, it's wholesome, it's respectable. You can even bring kids involved. Again, it should be that way anyway. It should be a community that people want to learn this because, again, we're behind, like I keep saying. Once it gets to that point, guess what? I know we made it. When you start seeing more of this stuff right here that we're doing, all up social media pages and YouTube and this, that, the third, that's when I know we made it. Right now, our little groups be small, and I love it. I don't care if we had 10 people show up on our live. I don't care if it's 13 people. That means that's 13 hungry people. That's all it takes. That's all it takes. Right? Because y'all learning how to leverage, right? Y'all finna get paid. Y'all finna become made man because you don't lose this skill set once you get it. Ain't no certification over here. No. You get better with time. Essentially, like I said, you become a made man. You just summoning money. Today was what? I made 1,100 yesterday. Today I hit what? I hit 530 on Tesla on the end of the day. I think I made about $1,400, $1,500 a day. For the most part, I posted most of it in the group. Y'all been seeing it, transparent. Everything I did is what we talked about basically yesterday. I literally did that during the live. I told y'all what I was trading. I broke it down. We sat here and saw this stuff happen, and then look, we could do this, guys. That's all I'm gonna say. And everything about a day trade, I'm not putting in that perspective. It's about learning how to read the tea leaves, how to use this information. We just plan using it again under the rules of engagement to get to where we need to go. Right? We want to work slowly. If we can make $50 a day, we on our way. If we can learn how to make $100 a day, we're on our way. If we can gradually increase that to around about $250 a day, we're on our way. If we can gradually get that up to around about $300 to $400 a day, we on our way. If we can gradually get it to about $500 a day, then that really puts you in a place of leverage. You see what I'm saying? That's over 100K after taxes. That's over 100K after taxes if you can get over $500 a day. Then you can do the math from there. That's why I love stuff, because now the compound interest aspect, the profit interest kicks in at a point where you be like, man, this is crazy. Because then you can say to yourself, well, how hard is it to make $1,000 a day if you working with what, 25 grand or 50,000 or $100,000 in what? In investment money. In this case, even if you got trade value money, how hard to make $1,000 a day off 100,000? Let that marinate for a moment. Remember we did the 100,000 just to make $1.66 on a money market account.
Mm-hmm.
With 100,000, do y'all not think y'all can make at least $1,000 a day with $100,000 liquid every day in investment? Put up money. Seriously.
Yes.
If we could use a $130 lot, buy in a strangle strategy to get 3 points in an option contract that pays out about a 50% yield, about 65, right? With 100K, with 100,000, imagine how many lots of 130 you can buy. That's roughly about 100,000. 130 times what? Times what? 1,000, right?
Yeah.
Is that right? 130 times 1,000? It'd be about 130,000.
Yeah.
Is my math right? Is my math right? In that case, we know it's not going to be 130,000 because we only got 100,000. But that still gives us about what? About 100 and what? 100, right? Excuse me, about 80, somewhere about 80 lots of 130, right? Somewhere around there, give or take. Y'all with me there?
Okay.
Mm-hmm.
Uh-huh.
Somewhere about 80. I think 80 puts us near 100,000. My math a little shaky, but just for the sake of that, right? So that means that's what yeah, if I got that right. No, I said what is 800, right? Is it 800? It's 800, right? 800, I'm sorry. 800 times 130, right? Am I right? 800 times 130 is what? Real quick on the way out the door. What's that?
800 times 130. Oh,
Yeah.
4.
That shit. A little bit on the
104,000.
So it's a little bit over. Okay, so 104,000. So we a little bit over. So we're 70. We'll say 75. Right, 75. So 75 times 130 is what? Real quick. I'm sorry. Last thing. What's that?
9,750.
9,750.
Yeah.
So 9,750. Right. All right. So that means in that perspective, right? So that puts us basically that'd be like 100,000, right? Right. So basically that'd be times 100, right? If am I saying it right? Times what 10? No, yeah. 9,075. Yeah, 130, right? I guess it's either 975 or 975, right? Y'all get what I'm saying? I'm trying to do this real fast. So that roughly means what? That's 75 lots of the 130, right? Right. So 75 lots times 130, right? And we talk about it being what was it, like 65? What was the profit again? Wasn't it like
Yeah, you said 65.
Yeah, 65 from the 130. Yeah.
Right, 65. So So that'd be 65, right? 65. All right. Make sure I got that right. Right. So how much is that? So let me make sure I got that right. Yeah. So yeah,
What you
did I say?
doing?
Yeah, so yeah.
75 times 65.
I got I got that right. I know it's late, I'm getting tired. So 130. I'm sure it will look like on 100,000. That's the last thing I want to do. And I'm gonna get out of here. So that's 65. Yeah, 65 times. Well, yeah, it's 75, right?
Yeah, 65 times 75 is 4,875.
So for how much it said? How much?
4,875.
4,875. All right, and so that'll be equivalent to that of what? Gosh, it'll be like equivalency of what?
2,437.50.
40. It was like what? 48,000, right? Yeah, it'll be 48,000 because it's times 10, right?
Oh yeah.
Because we got the 100,000. Makes sense. We got the 75 lots, right? So because it's about 50%, right? It's close to that value of it, right? Or close to that value of that, right? Because that's a little bit over 50% with 65, right? Somewhere around there, right? So that puts you at roughly around about off that 100,000, around about what 48,700 and what $50 right there, right? So I just want to make sure I do that. So that's off near $100,000 right there, guys, buying contracts for a strangle position. That's on one day.
Yeah.
We were shooting for $1,000, and you didn't bypass that and made 48,000.
Praise the Lord.
Hey, bro, Ultimate, it'd be just like that too. Hey, look at him. Y'all done called. Y'all done got Peter Popoff on the line. Y'all done called Miami and got some of that Miami, that Florida water, that Peter Popoff root bag. You
Hey,
call me.
every time I get my bag, I play this.
Ultimate, hey, boy, just be in the house dancing and tearing up the house. But boy, I'm tearing up the house. That's strategy, guys. Let's go. Let's go. We make it make sense. Dollars and cents over here. All I'm saying, gradually work yourself up to it. This ain't no marathon, guys. I mean, no sprint. It's a marathon. Gradually work yourself into it. Y'all with me?
Yes, sir.
Ain't nobody finna be calling to me. No, we finna turn 100 I'm sure turn 100 and 100,000, all that stuff. No, we don't do all that. We're gonna do it the right way, gradually, and we're gonna make it make sense. And we're gonna be able to give the people the blueprint how we did it, the steps we did to do it, so it won't be like you run a game. No, this is how you do it. Make sense?
Yes, sir. Definitely.
I'll leave it at that, guys. I took up too much of y'all time as it is. We're gonna end on a good note, because guess what? We're gonna get this money one way or the other. We ain't got no more time on our side. All I'm saying is take your time, learn it. Be patient with yourself. Don't try to overshoot for the moon. Get used to getting on base, right? Base hits is what wins the game. Trust me, right? This is a ground game. This is a ground game. It ain't always swinging for the fences, right? The fences will come when the right time show up, right? Because volatility gives you that opportunity for that to happen. Make sense? When the market opens up the way it's doing right now, because the volatility and all this whatever fundamental news that's called, neither here nor there, we still understand some basic rules of engagement: peak to trough, support, resistance, pivot points, right? Understanding how to play these straddles and these strangles. And again, that's on the opposite side. But just even if you're using real equity cash, if you got that kind of money sitting around 10K, 5K, $100, I don't care. It's gradual. It's a gradual increase. Get used to getting on base and getting profit. Eventually, it's going to grow. And before you know it, you'll be able to kind of catch those little plays like that. You'll be able to put forward and make 370 or whatever. Or, look, no rhyme, no reason. You on your way to becoming a made man or a made woman at that point. Making some money. We ain't doing nothing complex. And then you pay it forward, teach your kids. That's all I'm saying. Your spouse and your family and everybody else, right? So that's it. So I'm believe that. I hope y'all got somebody tonight. It's on YouTube. Y'all know how this stuff go. So if you want to do the playback, go to YouTube. Right? Go to YouTube. Right? Because that's where you're gonna be able to go back and get this at. And I'm sorry, my YouTube family. Y'all know we have a training on Thursday night, so I'm just not looking at the YouTube because I was over here locked in on the screen share. Thank y'all from my YouTube side that came through, right? Everybody on the YouTube, right? So Sister Mika Obazane, Brother Everything. Who else was in the building? I found Brother Chavez came through tonight. Brother Chavez in the building. Peace, power, prophecy over, right? Brother Dollar Will came through. Our brother P Smooth came through, right? We see the family over there. I see y'all were jumping into YouTube. I'm just not seeing the YouTube guy. My bad. This training is for the recording, so that way y'all can go back and replay it. But this is our natural training night for our mentor scenarios, mentoring services that we do actually. But again, it'll be up. Y'all know how to go. Just go to YouTube page, pull it up. If you want to download it, you got something you can work with later, right? So, shout out to everybody on the YouTube side. Thank y'all for being, awesome, contributing to this because we're gonna get this one with the other, right? We're gonna get this one with the other. I'm just gonna keep saying that, right? Till you blue in the face, right? And if you want to mess around and buy one of them things that you see in the back of me behind me right there, knock yourself out, right? Right? Do whatever you want, but at the end of the day, guess what? They can't tell you that you didn't earn it, and you earned it earnestly, right? That's what I love about this. They can't take this from you once you get this here. They cannot, right? And it'll follow you for the rest of your life because you always better summon money. All right. So in closing, anybody got anything before we get out of here? It's 1 o'clock, but we brought the house down tonight. All right,
buddy.
Any words, man, before we get out of here? Anybody got any questions? Anybody in closing? Anybody got anything before we get out of here? Right. I'm doing like now. You see, you got me doing like they do in church. Where you raise your hand before you get up walking.
Trade well and stay green, my friends.
You had a little handkerchief like, hey, look at me, come get it. I'm trying to get out the pew right now. You say over, Chris. You say
Trade well and stay green, my friend.
Facts. Definitely second that, third that, quadruple that. All right. Anybody else before we get out of here? Anybody got anything? Everybody's good?
No, I'm just gonna continue to study my money nature, and you guys peace, power, and profit.
Listen, facts. Agree with that. Anybody else? Right? Everybody solid. And they tell you in the church, like, make sure all what they are. What they were saying on the way out there? Make sure all hearts are what? Hearts are something. Hearts are hit. So I forgot to go. It's been a minute. I'm
hearts
so
and minds.
All hearts and minds are fed, and everybody comfortable with something. They be saying, I don't know. I'm cutting up, but y'all forgive me. I ain't no disrespect. My bad.
And remember that the door of the church is always open.
Right, always. And look here.
Calling it, you attracting it.
There you go, right? And we ain't even the patch collection played around about 30 times before you even sit down. We ain't gonna hit you like that. Right? We ain't gonna hit you with the collection play every 2 seconds, right? So you good to go.
I like when you said that we're all in the game already. We're all paying taxes. We're working at 9 to 5. We're paying taxes. We're getting paychecks. We're already in the game. So it's best to have the knowledge.
Thank you. That's the whole point, to see y'all getting it. They already digging in your pockets. You now go trying to dig in theirs. Get them out your pocket and go dig in theirs. And then also on top of that, start giving your money away freely to things that don't give you a good return on your investment just because you know you can do it. Put that money to work. $5, $10, 20. We got it. We keep saying we ain't got it, but we got it. We see it every day that we got it now. Because the market make you out to be a liar. Because it stocks at $2, $3, $6, 50 cents. When that CEI that ran today after got murdered yesterday, it murdered all the way down to 80 cents.
Yeah.
This morning it woke up and ran literally from 91 cents all the way to $1 day to $1.90.
Yeah.
91 cents. It went from 91 cents all the way up to what? About 190.
That CEI wasn't bad. I had 100 shares to start out with, and
All
then
of
when it jumped up, I sold 50 of them. So I got it before it really dropped down. So I was able to sell some more off yesterday, but saved a few. So when I saw that green, I was like, yeah.
I ain't making this up, guys. Look at that right there. Not making this up. It was at 80 something cents yesterday after hours. We saw it. We sat there and talked about it, right? I had my little puts in it. It went from there. It went all the way up to 183, 184, somewhere around there at the high. In less than 12 hours. Less than 12 hours.
It's still up there around 170, 180.
Yeah, right now it's at 176 after hours.
What?
Y'all didn't hear me what I said. This was like a 91 cent stock. 81 cents. I didn't say dollars. I said cents. So you take your same little 100,000 and you bought them. I'm gonna leave that alone. Let me get off here, man. We'll be all night. Y'all get it. But I'm just saying, you don't put all that in there, but y'all, you can take a little portion of that. But all I'm saying is our cup runneth over here. We have ample opportunity. We have ample opportunity afforded to us over here. We just gotta know how to work, how to move, how to stick and move, how to find those fertile soils, how to play within those spots properly, and get what we need, and let's keep it pushing. If not that, crypto, right? I'm sure y'all saw the Shiba Inu. Shiba Inu went ballistic. It was people that didn't even know what they were doing. That somebody told them what to put them on game and say, hey, buy some Shiba Inu right here. They were buying it at what? 0.0000021, and the thing went from 0.00021 all the way to like 0.0003435. And people made a little bag.
Is that the thing or? I gotta get some more of that.
But now you know how to buy it in context. It's still peak to trough. It's still what? Support resistance. We gonna buy with what? Buy with clarity, because we understand how to put it on the charts. Right? We know the levels. We ain't gotta be, just jumping out there emotionally. So as long as you know how to chart it, put it in that kill box, fair game. It's game on.
Right. And if I see something running, I'm like, okay, I'm gonna have to wait till it comes back down a little bit.
So it's a game of patience. That's the whole point of this. Patience brings you the paycheck. Right? So y'all get it. So I said, I'm out of here, guys. We ain't got market be open about 3 hours. It's Friday. I typically wake up for 4 o'clock session. I catch me a little early morning runner on Webull, hit it up early, then go back to sleep about an hour, wake up again and get ready for all the other stuff. Right. So that's it, guys. So thank y'all for tuning in. Again, you guys are awesome. Appreciate you guys a million. Again, like, share, subscribe if you're new to the channel. I know people on the YouTube, even though we're saving it for the mentor session, but y'all get it. Either way, it's on there. If you want to go back and rewatch it, go to the YouTube page. Y'all see it because y'all know the title at this point, and you can go back and do some replay, study on it, whatever. Right. So now I see you guys back in the respective groups, Facebook, Discord, wherever. And Friday, we'll see what the market gonna do. Right, one way or the other. We're gonna continue to break this stuff down, learn it, and so we could be comfortable at some of the money whenever we want to. Right. I think right now, I don't know what the future's at, but I'm pretty sure it's gonna be something. It's probably gonna be up because they passed that little Senate stuff. But we'll see how long it's gonna last, because it's bouncing off that midline, like we just said. So it's either gonna go back and test that resistance at 441.50, or it's gonna lay down. If not, it's probably gonna roll over because they talked too much trash and messed up the whole the bounce. Wall Street already done priced it in, apparently. Look at it. Y'all see the futures right now? Look at that. We don't believe you. You need more people.
Yep. I already knew it was gonna turn red.
They priced it in. They like, y'all done play with us too much now. We done made the big run. They made 2 big runs ahead of that debt ceiling news, right? It was easily possible buy the rumor, sell the news.
Tomorrow, I think we got
and we got non-farm payroll. That's what they're scared about too. Cause what's ripping that? What ripped today that got the market scared? I posted it early. Remember, I posted. No, what was it? What was the one asset that ripped early this morning that made the market a little spooky though? Even though we had a big run, but
10-year yield.
Cotton?
That too. Look what's up right now. Look what's up right. Look what they front running right now. Y'all see that right there?
Fix.
Y'all, no, right here. Y'all see this right here? Y'all see my screen?
Oh, okay. Yeah, the bonds.
They front running it. It's up another 1%.
Oh, bonds.
Yep.
When we start off talking about the bonds, that's how we start out tonight. Talk about what the bonds, the Treasury, New York Fed for a reason. That means the
hit
yields
1.6 tomorrow.
Because what? Inflation is telling the feds to stop printing. You killing the economy. Yields are trying to go up, and this stupid behind idiot is trying to what? Continuously robbing. All right, I'll leave that alone.
You telling the truth. He messing up stuff, man.
Either we going down to 435 tomorrow, or we gonna have to break above that that 441.50. One way or the other, we going to hit one of them. We gonna ping on something tomorrow, and if they try to kill the option tomorrow and the theta burn, then of course they have the option to do that too. Because we know there ain't nothing fine out in the market. But for now, we know we got our top and we got our bottom. That's all I'm gonna say. And so we're gonna see what's gonna happen. If non-farm payroll numbers are good, which we already kind of banking that they're gonna be good because the job and claim numbers were actually good today, that means there's more pressure on the feds to the taper.
But remember, good news is bad news for the market.
Well, that's why I say, because now that means the feds are getting more and more under the gun that they have to start cutting back the money printer. They're going to shut down that thing one with the other. I know they hooked.
Shut
They're
off
addicted
the cocaine.
They're addicted to the drugs right now. They're addicted to it. It reminds me of that little song that Tariq be playing. Oh, yeah, I'm addicted to boy. Something. So I'd be laughing. That boy crazy. That right now, J Powell, that's what he is right now. He addicted to it. He addicted, and he just don't realize. But either way, y'all get it. So we'll watch it tomorrow. So that's the economic data point for tomorrow. So if y'all able to catch that, it comes out what time tomorrow for everybody that's new that might not know. What time the non-farm payroll numbers come out tomorrow?
It'll be
7:30.
7:30.
All that news always come at the same time. It comes out what time? 8:30 a.m. every day. Every day there's any kind of important economic data point, it typically comes out at 8:30 a.m. And you got some stuff that come out at 10.
Employment rate.
Right, depends on where you at. Right, on the time zone, but on the Eastern Standard,
Eastern Standard Time.
Right,
yeah.
EDT. Right, it comes out at 8:30 on those important economics. So that's something y'all might want to put in your notes or go back and replay this later. So that's when you're gonna see the market act a little retarded. Right,
at 1.1593. That thing is shooting up.
It's still going up. That's what y'all seeing this in real time. I ain't making this up. So y'all know when the 10 years ripping, that mean what? Tech is what?
Tech is getting murdered.
Tech is dipping. And so look, even China barely Nikkei running, all that stuff don't mean nothing because the U.S. is under that 10-year pressure right now, and it's rampant. It's running rampant. That's what I posted this morning. I say the 10 year is running. So guess what? Y'all need to be cognizant of that. That's what kept the market from going any higher. That's why we couldn't hit that resistance at 443 because the 10 year just stayed up. It wouldn't come down, and the VIX was on the pop up too. It was nothing they could do to pump it. They were trying, but it just wasn't enough. And so as soon as I started seeing that resistance, I started buying them puts up near 41.50. Oh, excuse me, 441.50. Well, it was like about 441.17 when I started buying. 30-cent cushion, whatever. But I started buying my puts right around there. And so it rolled over at the end of the day, as y'all saw. And that was another little bag I made on the way out the back door. Right. But anyway, I'm out of here, guys. It's late. I'll see y'all in the AM, guys. Back in the groups, right?
Yeah, peace, power, and profit, family.
You got a question?
Yes, you sleep over there, Miss Shanika. I got her up late. She got the baby. You had your hand up, or you just waving? You just waving?
Okay. It's late. You right.
Yeah, it's late. Go get you some rest. I know y'all be up late when you got them babies. Yeah, y'all get some rest. I'll see y'all in the groups, and I'll see y'all back in our respective places. Good night, everybody.
All right. Good night.
Good night, family. Peace, power, and